statements by GRA and any other business. Can somebody move that we adopt the agenda? It has been moved and seconded that we adopt the agenda without amendment. Those in favor, please say aye. And those not in favor, please say no. The ayes have it. On that note, the agenda stands adopted. We've already observed the prayers. I'm not sure whether we have any new member here, because most of us were here yesterday for introduction. If there is any new member here that was not with us yesterday, can you kindly introduce yourself? I think I observe the lady at the end. She was here? GVA was here? Yeah, she was not here. Yeah, can you introduce yourself? GVA, okay. Any other person who was not with us yesterday? None. So no need for the general introduction. We will go straight to the main item of the agenda. That is the consideration of the annual activity report or reports and audited financial statements of the Gambia Revenue Authority. Honorable colleagues, yesterday GRA had submitted or presented its 2020 activity and financial statements reports, and today they are scheduled for consideration of the said reports. Our SMS did very good work. They went thoroughly over the said reports and then came with this analysis. We have gone through the audited financial statements and management letter of the GRA for the financial year 2020. The appointed auditors expressed a true and fair opinion on the financial statements. The auditors confirmed that all transactions of the corporation were recorded in accordance with general accepted accounting principles, in line with requirements of GRA Act 2004, amended in 2020, the Companies Act. Tests have been carried out by the auditors on the transactions of evidence to support the amounts of their disclosures in the financial statements. No incidents of fraud has been reported. On the basis of the opinion, the committee can consider the financial statement for adoption. That's the opinion of the SMS. After a slump in 2018, the financial performance of GRA recorded surpluses in 2019 and 2020 of 56.509 and 86.301 million respectively. An increase in revenue and a decrease in expenses explain high surpluses in 2020. The committee should be interested in knowing the reason for the increase in the admin costs. This is a fundamental issue that we came across and where I will come back for GRA to shed light on that. The balance sheet does not have issues. The capital reserve on establishment has not been impaired. The cash position has improved mainly on account of operating activities and movement in working capital. That is 124.083 million and then 82.775 million. Of this increase was used for acquisition of property, plant, and equipment. Depreciation, though charged to the income statement, does not have cash flow effect. GRA has now opened new fund accounts to which has been appropriate funds. These are the building fund and the motor replacement fund. Other revenue source brought 4.965 million in 2020 compared to 4.051 million. Total expenditure decreased by 3.806 million over 455.255 million figure of 2019. Expenditures have decreased year on year. The increase in personnel costs can be attributed to annual increment in salaries. The admin and operational costs are variable and therefore requires explanation. So far, these were the issues that were spotted out in the financial statements. If I may recollect the areas where you need to do explanation or clarification, one surround the increase in admin costs. And at this juncture, I would like to invite either the finance director to shed light on that, why there is increase in admin costs.
Hello. Thank you very much. Thank you very much, Mr. Chairperson. My apologies if you struggle to get me a little bit. I have a cold, but in delving straight to the issue, admin costs from 2019 to 2020 actually went down. It didn't go up. And ordinarily, you would expect it to go up, all things being equal, particularly in light of the fact that prices are generally on the increase in terms of inflationary pressures. But then 2020, you would recall, was the year that we had COVID. So we went to an extent where at the level of our target, the target was also reduced, it was revised. And we also, at the level of the board and management, also revised our expenditure downward. So basically, that's why you have a downward shift from 2019 to 2020.
Mm-hmm.
Personal expense has actually gone up. This has dropped. This has also dropped comparatively.
Mm-hmm.
What we had was a table because we have reported.
No, that is here.
Yeah.
Yeah, you are right. I think I missed the two. There is increase in revenue and decrease in expenses. So the explanation should be based on that, not actually the decrease in or increase in expenditure. It is increase in revenue and then decrease in expenditure. So the explanation should be based on that. I'm sorry for that. Yeah. The other issue connected to that is also surrounding the same decrease in expenditure in the year, but the personal cost that can be attributed to annual increment in salary. So admin and operational costs are variable, and therefore we would like to that explanation why the variable in admin and personal operations.
Personnel costs, as you realize, principally based on staff costs. And with respect to two components, you could have an increase. One component is increase in staff numbers. And of course, there were increases in staff numbers, as well as the annual increase that the staff are due. So those two components would generally be the reason, and in this case it was.
That's the increase in the staff numbers?
Yes.
Resulted to the variable?
Yes, staff numbers and also the annual increase.
Colleagues on that.
And I'm also just reminded kindly by the Human Resources Director just now that also in that first period of the COVID, that first when it hit, and we also gave some assistance to the staff. You would recall there was this issue of shortage of commodities, and we did lend some sort of help to the staff to be able to go in and buy some essential materials in terms of rice and oil and stuff like that at the very beginning. So there was a small help that we also accorded at that time. So cumulatively, those are the three things which led to the slight, very slight increase between 2019 and 2020.
Honorable colleagues, any issues surrounding the variability in admin and operational costs as explained by him? No issue on that? Now the other issues were surrounding the management letter, and there were a few points that were identified there, and the committee would like you to shed light on them. Honorable colleagues? Okay. Mike? On the management letter?
No, no, on the financials, yeah.
On the finance, okay.
Yeah, on the director's remuneration, you know, when you look at it, that's going to be on page 20, of the financials.
Page 20 of?
The financials. The financial statement.
Okay.
Yeah, the executive directors and the non-executive directors, they are, the pay, the disparity is too big. Maybe we need to have some explanation about why this disparity in payment. But if you look at the executive directors, you have 7 of them from 650 to 850, and 2 from 851 to 1 million. And then the non-executive directors, we have from 0 to 120, and then from 120 to 180. For this, can you explain the disparity in this thing?
Okay, thank you for that question. It's actually a simple one. The executive directors are those of us who are employed full-time and heading the departments, the various departments, so it's a full-time job. For the non-executive, this is the rest of the board who basically, of course, have the supervisory function, but they just come in on a monthly basis for our meetings and that sort of guidance. So it's not a salary for them, but rather just allowances.
Okay. Any other issue on finances before we get to the management letter? That's okay? Page.
That's on page 29.
Of revenue, okay.
Yeah, you know the subventions by monthly basis. I just wanted to find out how do you get the subventions? Is it just like the other ministries where they take and then send to your account, or how do you receive the subvention?
Okay, with this, primarily the arrangement is that of monthly payments based on the targets. You can see that the amounts are varying month after month. So depending on our performance, this can move downward or upward. So once we have a performance for a particular month, then the following month we do a reconciliation. We compile our figures, we do a reconciliation, joint tripartite reconciliation, us, Ministry of Finance and Accountant General. And then on that basis, once it's confirmed, then they pay a percentage to us. Mm-hmm. Yes, through our bank account.
Bank account,
yes.
That's fine. Thank you.
On that one, we also observe 2019 and 2020 being compared, the increment in the subvention, for example, in the month of January from 30 to 42, is it million?
Yes, it is.
30 to 42 million. And that being the lowest for 2019. And for the 2020, the lowest was 34 million somewhere in September.
Yes.
The highest was 53 million in April. What determines this increment from 2019 to 2020?
Yes.
And then I'm coming.
Yes.
That difference monthly, for example, in 2020, where you in a particular month you got 53, and the other one 42.
Yes, it's performance-based. Okay. We have a performance-based arrangement with them, where it is based on our targets and the performance of that target. So basically, each year, as you realize, government would set a target for the GRA through the Ministry of Finance. On the basis of that target, as we perform, good or bad, it is tied directly. There's a direct link between what we receive, what we collect, and what we receive. So if we collect more, we are paid more. If we collect less, we are paid less. So this is why you would have a variation from month to month, and of course from year to year, because every year the target increases, as you realize, through the budget process. So every year as the target is increasing, this component also increases. And there's a direct link also between this and also expenditure generally. Yeah, because the more we have to expand our collection activities to be able to collect a bigger target, then also generally we would spend more. So from the expenditure component, maybe I should just mention now, it's bucking the trend a little bit. The fact it's gone down is mainly because of COVID. Ordinarily, it would have gone up had we carried out full operational activities.
Okay, thank you very much, Mr. Chair. I just want to add to what the Director of Finance has said. The variability you have observed in our subventions or the revenues that you have seen there is by design. So this is also supported by our act, in the GRA Act, in terms of, the powers given to the minister in terms of, agreeing on the subvention that should go to GRA. That is already contained in the act. So currently what is prevailing is 4.5% of the revenues that we collect. In determining the formula, there are some revenues that are not part of the package. But whatever is part of the package that is agreed, it is 4.5%. So in other words, the motivation is there for us to collect more, because the more we collect, 4.5% of a bigger number will always mean, more subvention to GRA. So that is how it is designed. Thank you.
Any other from honorable members? Fofana?
Thank you, Honorable Chair. Still on the financials, I will refer you to page 26 of the audited financial statements. Page 26 of the audited financial statements. Yes. Other staff cost. Let's look at the last one, which is the bonus payment. We want to know how is it computed? Is it based on a percentage? How does management come about establishing the annual bonus that is supposed to be paid to the staff?
Yes, again, this one based on the act in terms of GRA achieving the target. In our case, mostly even surpassing the target. The bonus is paid through the ministry, and this is just based on, we calculate the staff numbers based on a month's pay. Then the ministry sends us the money for the payment. But this only takes place where we surpass our targets. When we don't meet it, we don't get any bonus.
So it's like a fixed amount, because if I hear you clearly, you said based on a month's pay.
It wouldn't be fixed because personnel costs would vary year after year. So based on staff numbers, so each staff their month's pay. So which means that each year there would be changes to staff costs. There's a correlation with that.
No, I understand that. What I'm trying to say, it being fixed is the fact that the staff cost during that particular year, it's known.
Yes.
Based on the number of staff who is there.
Yes.
So which means, let's say, for example, in December, the number of staff you are having,
yes,
and their what? Staff cost on monthly basis. Is it based on the salary or the gross amount? Is it based on the basic, or you give them the gross, everything, all the entitlements?
Yes, it's the gross. Yeah.
Okay. Thank you, Honorable Chair.
Honorable Njai.
Thank you, Mr. Chair. Mr. Chair, I'll take you back to page 17, 1.7 on taxation. It says that the agency is not a profit-making entity and as such is not required to pay corporate income tax. That is understandable, but yet they earn bonuses on corporate income. So I don't think that makes sense because their salary is far above even the average of corporate entities. I think they should be taxed as they earn. What do they have to say about that?
That's a simple one. This is referring to corporate income tax. GRA does not pay corporate income tax for the reason stated, but the staff pays income tax. Every single staff is deducted on a monthly basis, and this is paid.
Is that okay? Any further question?
Yes, what I'm saying is that they are taxed probably under the lower bracket of government compared to corporate entities. What I'm saying is that their salaries should be classified as corporate because they are within that bracket.
A very simple explanation to this. Taxation is based on law. So how the taxes are collected is determined by law. And GRA is following the law in terms of doing the deductions as far as our PAY is concerned. On the corporate is also by virtue of law. That is why we are not taxed as a corporate entity like Africell or the other banks. So this is based on the law.
Any other still on finance before we move to the management data? No issue? Yeah, Honorable colleagues, then you can get to the issues that were highlighted in the management letter. I guess you have your copies. You can pick the issues. Yeah, there are various bullet points.
Thank you, Honorable Chair. Then I will refer the team to page 6 of the, sorry. Page 4 of the management letter.
The booklet?
Yeah, the management letter. The auditors have highlighted their concern with GRA maintaining a manual fixed assets register. Of course, in the management response, we've seen like the desire of management in improving it, but they've also expressed that Microsoft Excel is a widely used software by accountants, and over the years, despite it being risk-prone, but they have been using it efficiently. And they've also expressed the fact that, they were going to use 𝒄𝒄𝒏 with all the manuals coming 2022. So we want to know, what is the status of maintaining the fixed assets register in GRA as it is obtained now, as per the commitment of management during the 2020 audited finance?
Thank you. Currently, it is still on Excel in terms of what we have, but we have been working towards getting it on 𝒄𝒄𝒏. We have been discussing, and there has been some work done by the consultants in relation with the Accountant General Office. So currently, this is likely forced to be preceded by training part of our core team to be trained by Softtech. These are the software developers in Tanzania, and then also them helping us with changes to the setup. There was something done, but it was not to our satisfaction. We had problems with it because it involves some manual elements in the process. So we expressed the need to take it to be fully set up and fully automated, apart from the input aspect of it. So there are plans basically to send a team. The cost also was a bit high in terms of the fact that we need to train a core team of experts. So management has agreed to send half the team this fourth quarter, and then the other half would go the following quarter, basically in 2023, so as to manage the cost. But this is where we are.
Thank you. Honorable Director, you will agree with me that if you look at the financial position of GRA, the non-current assets currently represent, let's say, over 60 to 70% of the assets of GRA. In actual financial terms, if you look at page 13 of the financials, if you look at page 13 of the financials,
yes,
you would see the non-current assets there. 603,168 in 2019, and 652,416 in 2020, and in bracket on top it says in thousands of dollars.
Yes.
So we are talking about millions here.
Yeah.
So I mean, the relevance of maintaining a fixed assets register, the management of GRA knows it better than the National Assembly, because it helps in verification, it helps in control, it helps in tracing. So as such, if you go through the management response, you wouldn't see that much desire to shift from how you are maintaining it traditionally to an automated level, because there are certain statements there which underscore the efficiency of using Excel. And we all know how Excel works. It's very fragile. When it comes to control and user rights, it's manipulative. Anybody can use it. You gave yourself a target come 2022 that it will be operational. So my point here is, does management have the desire to graduate from using Excel to a level whereby whatever is reflected in the financials of GRA, we can all say for sure that actually this is the position of their non-current assets?
My answer to that is absolutely. Management is absolutely committed to that. But one has to understand the context. GRA does not fully control, I should not even say fully, GRA does not control EPICO. EPICO is under the auspices of the Accountant General's Department under an IFMIS team. So anything to do with setup and stuff like that has to be through them. So it's not for want of trying that we haven't gotten to this stage yet. There are stages in the process. As I said, there was some work done, but when we did our testing, we had issues with it. And of course, with financial statements, one has to make the necessary assurances system-wise to ensure that whatever goes in is not going to be garbage in, garbage out. So to that extent, we had gone through that process, and this is up to this year. And now we are moving to the next level. So these are just stages. It is definitely nothing to do with lack of commitment. Maybe the assurance is given in terms of Excel is just simply to make the point that, yes, we are aiming for something better. But in the meantime, with what we have, we are carrying out in the best way possible with controls. Yes, you've mentioned some issues with Excel, that is true. But of course, there are also controls you can build in to protect data and stuff like that, which was why we made the point that all these audits so far, we have not had an issue with the Excel itself that would cast doubt in the figures that are on the financial statements. But that was just to make the point. But in the meantime, we are definitely pushing, and we hope that with the help of SoftTech, we will be able to get to this level, hopefully during the early days of first half of 2023.
I just have two more questions on that to conclude. The first one would, this particular question will be both for the external auditor and the DG. Did you When was the last time you did a verification, a physical verification of the fixed assets and correlated to what is obtained in the Excel? So I would start with the director, and from there we can have the external auditor also answer the same question.
Okay, that has been probably within the last couple of months, 2-3 months, maybe maximum. In fact, as a norm, we have that physical asset verification exercise every year. Apart from the fact that under the Department of Finance, who's responsible for this, we carry this on an ongoing basis. As we buy assets, we tag, we record, we update our assets. But within the process, we also have internal audits, an internal audit department who also do a verification annually. Particularly prior to audit, we would have already also rechecked again. And so this would be subject to audit. So as they are auditing now, that information would be with them for them to review again this year.
The external auditor, were those documents availed to you during the process of your auditing?
Thank you very much, Honorable Chair. Thank you very much, Honorable, for your question. Yes, during the period under review, 2020, and verification report was provided to the audit team. We also did further checks that relating to reconciliation, that we reconcile what is on the asset register and what is in the notes to the accounts and virtually to the statement of financial position. There was no significant differences. But the fact that using an Excel, there is an inherent tricks that we have highlighted. Thank you very much.
Yes, Chair.
Honorable Chair, Chair.
Thank you very much, Honorable Chair. No, it's not. Oh, you have some
Okay, if it's a different issue, allow him to come in. Then after you can call.
Thank you very much, Honorable Chair. I think in the previous legislature, I was here also, and then I think our committee, we were duly informed by the Accountant General that they're going to have a new module in 𝒄𝒄𝒏 10, and that would actually cater for the asset register for government institutions. Before that, they did not have it because of they need to buy it for it to be part of the package. So they didn't have that. So we were informed, and it's good that actually institutions actually are beginning to take it up to ensure that they keep it, because traditionally Excel is just a spreadsheet. It doesn't really, it's not really a good, you know, to keep records with, because especially when you do asset movement and stuff like that, you may have some issues along the way. And then the most important thing is about the controls, because when you dispose of assets, you know, there are some steps that somebody actually will have to take, and then if they are stored in Excel, that may be really very difficult to to do. But it's good that at least we are moving forward to ensure that we capture that in the in the 𝒄𝒄𝒏. Just to confirm with the Director of Finance that if I just want to confirm that you said your directorate is the custodian of the asset register, if that's correct.
Yes.
Okay. Now for the 2020, have you had any chance of doing any asset disposal during the course of the year? Asset disposals.
2020, not off the top of my head. I think we might have, yes. We did.
You did, okay.
We did, yes.
Okay.
Yeah.
Now, I just wanted to find out if what happened, how did you capture that in the Excel sheet when you dispose of those assets? What actually happens, or what are the steps that you take to ensure that, you know, normally they should be removed from the asset register?
Yes.
So what processes actually have you taken to ensure that that's actually moved?
Yes, it's a typical accounting procedure based on the fact that each of the assets are held as separate units. That means that you depool it, you take it out of the pool. So within Excel, you will reflect the entries there to show that you are taking it out. It works on both sides, both the cost and the accumulated depreciation, so that the net effect is zero. Yeah, that is done. And within our process also, we go through the board to inform, basically seek their permission that we are doing this, even though from an accounting point of view, those entries have to be made, but we go through the board, get authorization, then we do it. So.
All right. Thank you, Chair. And maybe that's to the auditor. Did you have any opportunity to take a look at the asset disposal, documentations during the course of the year?
I have performed substantive tests on that area. Of course, it passed through an auction, and I went through all the auction documents and reconciled the revenue. There is no in here. There is no risk to that. Thank you.
Honorable Chair, on that, a supplementary. Okay. Honorable, give him chance.
That would be the last one. What I just want to say is like GRA is the backbone of this country. So, and I think it's really good that we are relying on government and you want that interface to be there. That's why you are still waiting for the EPICO 10. But if you look at page 21, where you have your fixed assets register, you are at almost 834,004,403 in thousands, which means you are talking about millions here. A greater chunk of that, 538, is the landed building, which is not a problem because that can be easily verified. But the rest is in furniture, office equipment, motor vehicle, plant, computers. So some of this might be very, very minute. Some of them might have been procured a long time, 4 or 5 years ago, but still you are benefiting from using them. The inherent risk in Excel is very high. For someone to make a mistake is very, very normal. You might have controls, but verifying those controls may be very difficult as well. I can decide to delete a column. Who would know it?
We would. There's a reconciliation.
I know, yes. I know. There'll be a reconciliation. Yeah. Altogether, there'll be a reconciliation. But I'm saying this, in a normal setup, I shouldn't have the right as a junior staff to delete. That'll be user rights. I shouldn't have the right as a junior staff to what? Add in a new asset. That'll be user rights. These user rights will not apply in Excel. So what I'm saying is, GRA can go the further mile, not to wait for EPICO 10, being cognizant of the fact that the value involved is in excess of $300 million. You can go have your own in-house system. There are a lot of accounting solutions which can do this. A lot of accounting solutions so that the risks will be mitigated. Because come 2022 or 2021 accounts, we would not like to see that still you are in Excel and you are still waiting for the assets module in EPICO 10, which means still will be at the same level. You have the financial model, you have the expertise, you have the capacity, your staff are highly trained. So, I mean, we'll encourage you to go in for that and make sure you have the system in-house.
I smile because I know it's not what Accountant General and government want to hear. We have had discussions of this nature. GRA is probably the biggest or second biggest stakeholder of government with IFMIS. So we have had, beyond this, we have had other frustrations in the past with EPICO, but government does not want us to go our separate ways with this. Because, you know, for the very obvious implications. We take your point in terms of the importance of this, but I think at this stage, I can say that we are close to probably achieving this on EPICO, because the fixed asset module is now set up on EPICO, albeit not in the manner that is okay for us. So this is the bit that we now want to sort out with the software developers. Okay. Hopefully, if we are able to do that by early part of next year, then we would, you know, we would start using the system to do it. Maybe that's basically how we are looking at it at the moment.
For that question. Okay.
Yes, actually, just to say something about the same lines about with the EPICO. I think we had an extensive engagement with the Accountant General's office, with them as well in 2019. 2018, when they had series of issues with the EPICO system itself, even though they have one of the best admin with EPICO with them, but then there are a lot of things along the way. So in fact, we went to the extent that we wanted proof. So they came with memos like encyclopedia that the correspondence showing back and forth with the Accountant General for issues that could have been resolved earlier, but it took several years for them to be resolved. So I think they have gone a long way because of we were not really sure what was the issue. So that's why we invited them. We invited Accountant General, and then we asked them to give us a proof that they've reported system issues. Normally, if you have an issue, you don't report. Nobody will fix it. But they were able to prove along the number of months and years that they were doing the communication. But effectively, there was nothing that much that was done by the Accountant General. But later on, it was actually resolved. Yeah.
Honorable Chair, but if it is evident that we have problem with EPICO and GRA is struggling, I think what we need to do also as an assembly is help them towards that, because the central government is reporting on cash basis. You are reporting on accruals basis. So one can imagine the hurdles you will have in the preparation of those accounts. So what we can do as well as FPAC is, part of our oversight is to improve on the systems. So we would also add our weight on that and see how far we can go. If at all, the divorce will not be on totalitarian basis, but we can see areas that we know that you can do away with them to improve on your internal operations. Thank you.
Well, Chair, I think we've done that. In fact, and that was as a result of them wanting to move from EPICO 9 to EPICO 10. We had a very long discussion along the system issue at the level of the Accountant General's office. And at the end, we realized that actually EPICO 9 actually had an architectural issue. In software development, when you have an architectural problem, meaning the foundation actually has an issue. And when the foundation actually has an issue, it may have a repelling effect when you set up the chart of accounts. And, there are a lot of reporting line issues along the way. And that was the reason why FPAC actually, we said yes for them to be able to move from 9 to 10, because the EPICO 10 is web-based. And, when you have web-based, actually, it's going to be much easier for usage. But then we wanted to find out, actually, why did they just realize that after making the payment and after several years, when GRA themselves, in fact, it was GRA actually that put us into that path for us to understand better the issues. So we took a stand. We told them that since the developer actually confirmed that it has an architectural issue, and perhaps the government, Accountant General, did not do the proper test at the time of the implementation, that is the user accepted testing, the security accepted testing, etc. For them to realize that there's a real issue, then what next? So we told them that now you have to tell the developers to compensate you, because we've already paid for a system that was actually faulty architectural. And we've agreed with them. They made consultations and they came back and said that that particular module in the EPICO 10, government would not have to pay. That's what they told us. We are yet to verify if that was actually the case. But we took them to the extreme end to ensure that government is compensated for the issue that was nothing to do with us, but for the issue of design that caused some of the issues that GRA actually was highlighted. So maybe we need to verify whether, if indeed that promise that they told us that they're gonna compensate the government for EPICO 10, that particular module, maybe we need to verify that. But we've gone very far, and then to be honest with you, it was because of GRA. That's why we knew what we knew about the system issue actually. Thank you.
Is that okay? Then on David Cham, on a different issue.
Yes, thank you very much, Honorable Chair. When you go to page 15 of the management letter,
page
15, 15. It was observed that the GRA's test of details on fuel was not noted. Have you seen it? Page 15
yes,
of the management letter. There was an observation that their test of detail on fuel purchase was not noted on the following purchases in a box. Of course, we've seen it for the year under review for the month of February, April, July, the 2 Julys. which the amount for February has gone to 769 million, and there was no delivery note attached. And of course, 773 million, no delivery note attached, and there it goes. So, and there is an implication that the delivery notes not provided implies an incomplete document trial to trace the transaction for payment to the actual fuel received by the authority. Yes, there is a management response which is not satisfactory. So I would like them to explain something about how they are doing it now. Thank you.
Thank you very much. Maybe just for the sake of the record, to just clarify that those figures are not millions. That would be a lot of money. So there are thousands. Yes. Yes. I think without trying to give any excuses, we handle a lot of transactions. And sometimes in the process of handling some of these documents, you may have situations where certain documents may get detached and stuff like that. But what we are doing at the moment, particularly delivery notes are being given for these particular months. For some reason, they might have been detached. Somehow they were not on the voucher. But I'll give you just a couple of issues, a couple of explanations. One of them, particularly for now, is that we use a document scanner so that all our vouchers, once they go through the process and finish, we scan them to PDF so that they are basically fully, completely filed. So in case even the physical document has issues, we have a PDF copies. That's one of them. Then in terms of these delivery notes, we are making sure that each of these are coming back with a delivery note. That's even the normal process. I think in this instance, it was a case of just the document being detached, but we are making sure that we get this. So if I'm to give you an answer in terms of current, we are paying special attention on that. But I would also say from the point of view of controls, because in accounting, you don't just leave one level of control. You have several levels of control. And so for these ones, despite the fact that the delivery note is not attached, there are other controls, because all the fuel vouchers, when they are handed over to operational staff, they sign for them. They would sign to say they have received X amount of fuel. So in other words, this movement, even from this level, when procurement brings the fuel coupons and takes it to the Department of Human Resources to hand it over, those at the Human Resources confirm all the fuel coupons through a recount and then sign off. That's one level. So that would confirm that this amount of fuel has been received and is signed for. Then the next level also, when it is given to staff for operational use, there's another level of also signature to confirm they have received the fuel. So other levels are there. I'm not saying this one is okay, but I'm saying this one was more or less one-offs, but we have resolved this. But there are several layers of controls with this.
So are you telling me that you were able to recover all these four which were pending?
It wasn't a case of recovery of the fuel. The fuel was in existence. The point the auditor made was that this particular document, the delivery note, was not available at the time. So that's the explanation I was giving, that it must have been detached during the handling of the documents. So, but these could still be confirmed because of these other layers of controls that are there. But I'm also saying that we have gone further to now alleviate this problem of maybe documents being detached or lost or whatever. So once we go through a trail, the procurement process to the end, we scan the whole document on a PDF file as a soft copy. So to avoid this kind of incidents.
Yes, thank you, Chair. Yes, thank you, Director. But on the same issue with this delivery note, did you make any attempt to go back to the vendor to try and get a copy? Because normally when they do delivery notes, they have them in triplicates. They give you one, maybe keep one for themselves or keep two for themselves. Have you made any attempt to go back to the vendor to try and get a copy since you lost yours?
I'm not sure we have done that, but it's probably doable because these are the vendors we deal with on a monthly basis, which is basically all the main suppliers of fuel. So it should be possible if we haven't done it. I'm not quite sure we have, but it should be. Huh? Mm-hmm. But for the others, you do. Okay. My deputy is just confirming that we did and got the others, but not for the one affecting Atlas and Gulf because of the change of company at the time. They said they could not provide the records.
Chair, also, if you look at the description, I'm not too sure if it is the same kind of transaction on a monthly basis. If you look at the first one, it says purchase of fuel for month of February 2020. Then the next one is month of May 2020. Then the third one says for senior management. Is it the same transaction or because the description looks different?
No, there are different transactions.
Okay.
On a monthly basis, we buy fuel.
Okay.
We buy in advance for the next month's operation.
Yeah.
So these are those transactions.
Okay. But why would for senior management for the month in the description?
I'm not sure, but basically it's a mix of operational fuel and senior management fuel. So maybe it's just how the detail was picked. Yeah.
Okay.
But it's for those transactions.
Yes, and we can understand the audit query very clearly because this week alone, I think we have an issue of fraudulent activity because of these fuel things, and I can really understand why they're saying this issue. So we just need to ensure that we do it because what we have seen actually, somebody raising vouchers, doing the payments, and going back again to get the physical cash. We've seen that just this week in government institutions. And that's why when I saw it, I was like, okay, maybe that's why the auditors actually are highlighting this. In fact, it's a different auditor, actually, not them. It's a different auditor. So we just need to be more careful. Now, for senior management, wouldn't it be much easier, operational-wise, to just pay to them directly, with RTGS instead of going buying and then, going that route? If you know that on monthly basis, they're supposed to have it. For example, if you're supposed to pay yourself, for example, you're supposed to have fuel, 5 to 10, or whatever it is it not easier to give you on your account directly instead of going buying fuel coupon and giving you? Wouldn't that be much easier?
There may be other implications in terms of payroll and possibly even tax implications. So for the fact that even for document trail, we want to just show the fact that, this is for fuel, and we feel that maybe buying the coupons is easier as well as with the document trail. Generally, we haven't had any issues with this. From the perspective of even further control, I may add, for each voucher that we raise, we have an invoice from the supplier. We also have the voucher itself, which is fully approved. We have a request also attached. And also when we do the bank transfer, we also print the funds transfer report. And so there is a lot of different things they are correlating and verifying the transaction. Plus also, as I said, the signature of the individual staff, because that control as well to ensure that the individual staff who's supposed to have it has it and signs for it. That is why also we have that signature form.
At that point, would it correct to say that other than the one for the senior management in July, the rest are for the same transactions?
Therefore, these are operational fuel.
Okay.
Yeah, for this specific month. So we do this on a monthly basis.
On monthly basis.
Yes, yes.
Honorable Cham.
Different question, unless someone has
okay,
the same question attached.
If anyone has issues still, okay.
Thank you, Honorable Chair. Honorable Director, yes. What the auditor is saying here is about responsibility. Because once the delivery note is received and signed, the individual staff responsible now is officially taking custody of them. And it's refreshing that you highlighted that you have other layers of control. So in case it was an oversight, the delivery note was not retrieved by the procuring personnel. So the other layers of control should have picked it up. And you've highlighted those other layers of control just 2-3 minutes ago. That is when you are raising voucher with regards to the internal controls. But here we have 4 transactions that have passed through all those extra layers of control, and none of them picked it up. One was in February, the other one was in May. Mm-hmm. The value of fuel procurement in August almost doubles that of February and May. I'm on page 15 of the management letter. So my question here is, it will be 2. The first one is, why is it that the other layers of control, be it in internal audit or be it at the account section, we are not able to pick it up? If at all it was an oversight, that the delivery note was not. In May, it was 773, but on the 22nd of July, 2020, 2 vouchers were raised. The first one being payment of fuel for senior management for the month of August, 733, and on the same date again, another voucher was raised being payment of fuel.
It's basically the vouchers that they picked which did not have delivery notes. So the vouchers displayed here, it does not mean these were the only vouchers. Yeah, these are the ones they did not find a delivery note. But through document handling, they got detached. That's how I figure this is. Which is why, as I said, to address the problem, we are now also scanning documents once we get through that control. So that, and we look at how we alleviate the problem and maybe avoid future occurrence. And that is why we have taken the action to also scan documents. But to be honest, in terms of the thousands of documents that we handle, the incidence of something detaching is possible. In as much as you try to avoid some of these issues, as human beings, some of these things can happen. But then it's how you try to ensure that you take control. And that is why we have this scanner now, where we are scanning all of this.
Do I take it this way, that all the documents were there by the time the payments were effected, and later on they were detached? Is that what you are trying to say, or they were detached before the payment was done? My question is, were all the documents present when these particular transactions were passing through the control system?
Yes, I would say yes. And the reason I would say yes to that is, apart from Directorate of Finance looking at all these documents, putting them together when we do the vouchers, also those signing would normally check for these things. But the ultimate check also is internal audit. When it goes to internal audit for payment, they would also check against vouchers. They would check for delivery notes to see that they are available before they stamp the voucher for payments. So I have every reason to assume that the documents were there but probably later on through filing, handling, we have audits of different people, both internal audit, we have audits of GPPA, we have audits of external auditors, we have people looking for information. So there could be a possibility of losing a document or two.
Okay. Mr. Chairman, just a last one. I can see murmuring behind. We are here for facts.
Yeah.
It's going to be difficult,
yes,
because we don't want to speculate.
Yeah.
We don't want to speculate. And the moment we start the interface, people will make opinion. But it is only the facts that can bring out the reality, absolutely, which is important for you and important for us. We do not have any personal relationship with anybody. So the only thing we are dealing here is with the facts.
Yeah.
And the main reason I'm asking this question is, you said documents were detached. The delivery note is supposed to transfer ownership from the seller to GRA as an institution.
Yes.
Now, from your explanation, we can establish the fact that the procuring unit have received the delivery note, which means they've taken responsibility, and the controls were effected. It was at the storage that probably you are saying the documents were what? Detached. If the questions were not posed, will you have the opportunity to do that clarification? No.
No.
So we'll ask more questions.
Yes.
They would come. So, and the murmuring behind also subside. Huh?
Thank you.
Honorable Chair, you may proceed.
Yeah, if I may come, would it correct to say that the delivery notes for all the purchases were intact except for these 4? Would it correct to say that?
In terms of the audit findings, yes.
And in terms of audit findings,
yes, yes,
they'll say only these 4 were affected.
Yes, which is why they highlighted
where they
them.
could not come across the delivery notes.
Yes, yes.
And that's why we've come with this other control mechanism to scan the notes in case of disappearance or detachment of the notes.
Yes.
So only 4 out of perhaps
thousands
were affected. Okay. And they will, I saw her.
Yeah, what I was just going to say is like, this was just a sampling. It's not like he went through he just picked few and then he realized this. So this was just a sampling that he actually did. But what I was going to say is, you know, we had the same issue with the central government, missing vouchers. And we were really very tough on that. In fact, we went to the AGD office to take a look at really on how they file these documents. Because for the most part, you know, the internal audit will do their work and then they certify that everything's there. And for the most part, if you don't have that, internal audit will not sign for you to be paid. Normally, that's the case, yeah. But at the time of filing those documents, something get missing. So we even went there as an FPAC to see exactly how to do their filing, the archives and everything like that. But it was a little bit messy. You know, so you can easily tell when you went there, you can easily tell that, well, this could be the reasons why, because you get boxes all over the place. They are not labeled and they are not actually filed properly. You know, I came from the private sector. We don't do it that way.
Yeah.
You know, everything is filed by year, by month, you know, so for me, I was a little bit confused. I said, this one looks like a Lumo or something like that. so what I'm trying to get at is, let's find a way, because we live in an electronic world.
Yeah.
And I know the AGD is testing a system right now for the past, I think since last year, is automated document management. Like what you were saying about this, the DocuScan, like every transaction, all the supporting documents are actually scanned to be attached to that transaction. So even if the physical documents are missing, you still have the opportunity in the electronic format to be able to retrieve and to give to the auditor to verify. So just to encourage you maybe to explore that idea also, because I think it is best practice, because even the banks, not Gambia, but some banks are starting to do now. If you use a check, sometimes after a few weeks, they will send you back your own check that they've cut everything. But now they have this scanned copy. So let's look at the other way in the automated document management system. Maybe that may be able to help you to keep track of all your documents that you have, so that when something gets missing, at least you have another way to get it.
You'll be happy to know that we are already on that track.
Excellent.
HR are the main custodian. Actually, with our records management, they are already working on that. We are testing at the moment. And EPICO was also supposed to include that document management, document scanning system. But because they were delaying, we didn't want to wait for them, so we bought our own scanner and started scanning our vouchers. So our vouchers, as we speak, we scan them once the process is complete.
Honorable Cham.
As I said, it's a different question. Yeah, with the expenditure review on single resourcing on page 17. Also, it was noted that a transaction in which the contracts and evidence of single source approvals were not provided for the auditor's review. So there is also an implication that single source approvals not provided for the auditor's review cast out as to whether management has complied with the GPPA procurement regulation with regard to single sourcing. There is a response, of course, the management response, which to me is not satisfactory because it was an oversight that special approval was not sought during the year under review, and management will take the necessary steps to address the situation. So I ask if is the situation now regularized? Thank you. It is on page 17 of the management.
Yeah, yes, I've seen it. I think, first of all, just to say that management accepted the audit points. In other words, this lapse. Under normal circumstances, we get the relevant GPPA approvals before we handle procurements that require such approvals. And GPPA can attest to that. I'm sure we are one of the most responsive in terms of compliance, but of course, we failed on this particular one. The added explanation is simply to just give you an idea what it entails. We are not making any excuses there at all. We were just explaining the fact that this is for lift maintenance, and usually in the past, we would write to GPPA to get the approval with the justification that these are specialist providers, because in the Gambia we don't really use lifts and we don't have that expertise in the manner that does Senegal. So this is the one we have been using over the years. So this was a lapse, basically. Once the period, usually once the period of contract is over, we write to get approval from the GPPA. So we are definitely going to handle that on our next one.
Yeah, but this happened in two occasions, which was on the 25th of November 2020 and then also the 31st of December. And these are huge amounts. One was 504,000, as you said, they are not millions. And the other one was 548,000. So these are close to almost, if you total them, this is already 1 million.
Yes.
So 1 million and oversight. I felt this is huge, really.
Yes, no excuses, but I don't think I can say more than what I've said, that it was a lapse on this one. We have done this for many years, and that was never the case. So this one lapsed. It was the same year. And of course, when you reflect on the transactions you are looking at, today we are looking at it at a point in the past. So at that time, until the auditors brought it out, we had missed it. So there's no two ways about that. We missed it. Yeah.
I also want to... Can you put the mic on? Okay.
Okay. We accept this as a procedural lapse, but we need to also look at the facts. We maintain a lift in our building. Hardly do you find lifts, in the public buildings in this country. So occasionally, the lifts will develop problems and will be required to do the maintenance. So we will admit the procedural lapse, but in terms of incurring the expenditure, that expenditure will always be incurred in the sense that we have the lift inside and it is being used. So, but I can assure you that the moment this thing was spotted out, management has already taken steps to remedy this, and you know such a thing would not occur again. I can assure you that.
Honorable Vice Chair.
Confirm, because I think they have something called like a framework agreement that GPPA actually can allow you to with such. So essentially, if you apply that one, perhaps this was not going to be the case here. So maybe we can look at that one. But in any case, Parliament actually has approved the GPPA bill of 2021. I'm not sure if the President actually has assented to it, but there are a lot of changes that you really need to familiarize yourself with it. And maybe perhaps this kind of issue may not be an issue anymore because everything will be handled at your end going forward. So maybe you need to take a look at that one.
Thank you for that.
On the same issue? Okay.
Sorry, I just want to make some clarifications. We are talking about single sourcing. Perhaps we should allow the representative from GPPA to tell us the threshold with regards to compliance, whether the transaction have passed that, even though there was no approval, but in case this particular transaction was supposed to go through the process, will it pass it? Then that's the basis we can build it.
Thank you. Of course, the threshold has passed. Just as they said, it is, or maybe it was an emergency. And I guess if they have sent it to GPPA, at least with a call, they would have at least made it easy for them also. And as you said, they have a framework agreement, so that will make things easy. So I guess they should go for that one next time, yeah. Or they start working on it now, since their lifter is always on problems. Thank you.
Okay. To that, what I would add is this: maybe we can also look in-house and see whether we would now have local people doing it. GPP have clearly stated that if at all you had gone through them, it would have been difficult because you've gone above the threshold. So we will not probe into that. We know the implications that will come with. But since you've accepted, we'll pass that. But saying that there is no company in the Gambia doing it and then it will come urgently, I believe let's start looking in-house as well. Maybe someone is doing it around the corner that we don't know. You know, that can make us also start looking this other way around. Because when you take it through the procurement process, we'll fail. You've gone above the threshold. You know, and looking at the transaction itself, the dates between the two transactions is less than 6 days.
I will do that.
You know, it's less than 6 days. So that in itself is splitting. But what I would encourage the management is, let's also look at the domestic market and make sure that any procurement process that will be engaged in, it follows the due compliance. Because what he fails to tell you is, the new GPPA Act comes with punitive measures. Honestly, yes. It comes with a lot of punitive measures. You know, that is for all of us there. So this one, we can say is an oversight. Yeah. It's understandable, but now it is stated in law that if this happens and it's in contravention of this and that, this is what should happen. So it is better also people know it that way. Thank you, Honorable Chair.
On the same issue?
Yes, please, on the same issue, because the only question I have for them last is, there was an institution who appeared here yesterday, and they said they've missed GPPA for from 2017 to date. And I hope it is not the same situation happening here, that you're using as a chance for not GPPA appearing to your office as frequent as they should, that lead you to this problem. GPPA, can you respond? I'm quoting an institution yesterday who appeared here yesterday as an example, that 2 days ago rather, that GPPA has not appeared at their office from 2017 to date. And you know, that might also connect to this one. Have you been appearing to their office as usual for regular work?
I think I want to suspend issue of GPA until when we clear this, then we'll come specifically for
GPA.
Let's reserve issue of GPA then
That's okay.
Then when we're done, then we'll come to them. Unfortunately, they were not here yesterday when this thing was going on, so they will have their own turn as far as this matter is concerned.
Okay, and
you want? Okay.
Okay.
Not on GBBA.
No, not on. It's a different question this time again. And cleaning of the GRA building, there was an amount of $3,402,000, which was paid in 2020. I think we definitely need to look at this. No, it's on the.
Are you quoting from the page?
No, from the SMS.
Okay,
yeah.
okay.
Yeah, so we need to look at this because the amount appears to be too huge. Is the general question? It should be on the audited account here.
Can you go over the figure?
Yeah, but then was there any cleaning or cleaning of the GRA building in 2020?
Honorable colleagues, let's coordinate Honorable Cham and colleagues. Let's deal with issues other than if we have outside what we have in the SMS analysis. Maybe you can ask that or something like that. But right now, what we are concentrating on is the management issues that are highlighted on the, look at the other paper.
Yeah, this is the analysis of GRA submission for the year 2020.
No, I think there are, you quoted from a different,
yeah,
where we have the financial statement 2020.
This is not even.
We have two sets of
it's there.
Analysis from the SMS.
No, I can answer.
So the other one, that's where we have the management letter issues.
Supplementary information, page 25.
No, it's a different one. Go to the different one. Check. Mungo. Yeah. Go the next page. They're there. So I'm suggesting, okay, let's try to clear those issues. Then the other one has more of what we call the issues surrounding the activity report. So this one is more on finance.
I can answer it.
Yeah, I think, yes, we've passed for the, just under that we have issues around the management letters.
I'm sorry.
No, this is at our level. Okay. This is our level. Honorable Cham, come quickly. There are two documents. On that, I think we have the bullet point 1 and then the last bullet point that were treated. On the, where we have management letter issues. The first bullet point and the second, last rather, were the ones that were treated. So you can pick any other issue from there. You may take it from there or you go to the management letter itself.
Yeah, it's okay. I will let someone ask any question if he has.
Thank you, Honorable Chair.
Okay.
I will refer the Finance Director to page 6 of the management letter. In page 6, what the auditors are saying, they are raising concerns over the fact that management have made some investments, but there was no documentary trail of those investments. Of course, we've also gone through the management response, which highlights that in the Gambia there is no stock exchange market. So basically, it will be very difficult to make comparisons. And then the best one can do is with regards to TV, treasury bills, or what? Fixed deposits. And if you look at the current economical environment, it is better to go for fixed deposits, given the fact that government have discouraged treasury bills, which is understandable. But still now, the management response doesn't put away or directly provide answers to why there was no documentary trail. Although management was trying to rely on the experience of the staff and the trust vested in them, but what the auditor is saying, whatever management was doing, document could have been provided. So I don't know what will be your response to that. Why was it that management didn't provide a documentary trail to the negotiations that you have with the banks and the different rates that they were really providing in regards to those investments?
Well, I think you also mentioned that we deal with facts. So at the time, we were not keeping documentary evidence of the negotiation itself. Okay? Phone calls, we discuss. We would look at T-bill rates. And in terms of the rates that we had, the rates were better than the current ongoing T-bill rates. I think there's no question about that, that our rates that we negotiated with the banks were better than T-bill rates. But of course, we accepted the fact that the negotiation itself, we did not document in terms of, paper documentation. But what we finally agree with the bank, that is in a document, and it is filed, and it was available for them, the auditors, to see that these are the terms we've agreed with the banks, and they could then cross-check those terms to the calculations we used to put figures in the financial statement. So that was never in doubt. But of course, we also accepted that that was good advice in terms of documentation. And since then, we are doing that. The negotiations, all the email correspondence that we have, and the rates going back and forth, we print those emails, we attach them as pre-negotiation evidence, if you like. So we are doing what they recommended.
Okay. Meaning in the 2021 management letter, you would not say this, because all these investments have a maturity date. So once they matured in subsequent negotiations, we are keeping the documentary trail, right?
Probably I would say 2022, because if you look at the timing of when the accounts are done and audited, by the time now, when they made this recommendation, it was close to the beginning of this year, 2022. So 2021, we would probably not have that, maybe tail end, I'm not sure. But I'm just pointing to the issue of timing. By the time they make the recommendation, we're already physically in 2022 or tail end of 2021. But we are doing it.
For sure, in 2022, you would not say
No, we are doing it. Okay. Yeah.
Just to add to that is that due to this issue coming up at the board level, we have urged management to come up with investment policy, which the board wants to put in place, which will take care of all these issues, because documentation is very important, because you need to put a trail of whatever, because it's money is involved, it will help in that. So just to make you just to assure you that this is something that the board also is seriously working with management to make sure it doesn't occur again.
Any issue on that? Then we move to any of the issues in the management letter. We may check. That's page 25. Okay. Yeah, if I may take you, or you coming? Okay. Page 11. Page 11 of management letter, I think begins from page 10. Okay.
But first, Chair, I just would like to comment the HR first, simply because yesterday when they read like the age distribution of GRA, it was very clear that they have a plan, because if you look at them based on the percentage I got here, 63% of the staff are between the age of 30 and 49. And that tells you that really that's something they want to continue in the near future. And then the aging one is about 23%, but then the youngest is about just 14%. So a big chunk of the employees fall within 30 to 49 years, which I think is really excellent. Which means there's a potential you can keep them for the next 20, 25 years, and it's really very good for continuity purposes. So I want to commend you for that foresight with the HR department. Now, if you look at the issue of HR here, the one they highlighted here is about the outstanding leave. You have some of staff with more than 150 days, some with 166 days. So this is a real concern, because it's always important you balance work and family, and I think it's also important that people actually take time off to be with their families, and also to ensure that in the future there's no issue, because again, we have some labor laws in this country that if you keep them this way and they want to go, you know what you're supposed to do, and that could be an implication, because you also work with a budget. So if you have 150 days for a staff, and you are talking about almost 5 months, salary and stuff like that, and you already have a budget that was approved by the board, that in case a staff leaves and you have to pay them this amount of money with other things, it has the potential to distort your budget, actually. So I don't know what exactly are you doing now, what's the current update to ensure that you've taken care of the risk that's actually highlighted there.
Yes, we have taken care of that. In the main, apart from the fact that our service rules allows the Commissioner General to defer leave on the basis of exigency. Apart from that, which in this case was the reason, because we had, you touched on the issue of IFMIS. Most of this outstanding leave applied to finance staff and also 1 or 2 other key personnel. But mainly because of the major issues we had with IFMIS. You have been around for a while. You would recall that, we had a backlog of financial statements, mainly because of system challenges we faced. And management was committed to catching up with that backlog despite the difficulties. And over the years, we have been able to basically catch up now. And mainly this is a result of having to basically this staff staying, doing extra hours and trying to just get this work done. So as we have achieved this, we have now sorted out the issue of the leave. And for even the department, not just finance, but GRA itself, we have a leave roster that the HR keeps. So every year, each department has to provide a draft leave roster, so that everybody is placed on that roster for a time that you have to go on leave. But just to show how that works as well is that they monitor that to the point that before that time comes up, they will write to the staff to say you are due to go on leave so and so time, so as to just preempt the movement. So yes, in a nutshell, we have worked on this already.
And the other one actually highlighted was also about the staff medical scheme.
On page?
Same page, 10.
10, okay.
We are doing HR now. On page 10, it was shown that that the limit is 30,000 for every staff beneficiary, but then they noted about 5 from the sampling they took that they've gone more than 30,000. So can we have some explanation? That's on page 10. of the management letter. Page 10 of management letter, yeah. Come. Fine, yeah.
Okay, thank you very much. Thank you, Honorable, for that observation. Management is aware of this, and these are rules that have also been established by management in terms of, how we administer, this medical scheme in terms of, the thresholds that we set. So at the level of top management, this is already considered, and what we normally do is those who have exceeded their limit, because HR is also, this is also administered in a manner that anybody who exceeds, HR will send a notice, to the staff that, the limit is exceeded, and the CG is also put on notice that, the staff has exceeded. So, in terms of administration, what we do, any cost over and above, the threshold, the staff has to, bear that cost. So it's something that the staff would be responsible for. So in other words, this is just a way of, motivating the staff, so that at least, the authority is there for the staff in case they get sick. But that, GRA is subvented, so our resources are scarce, so we cannot handle, all situations. But up to this limit, the authority, is there to ensure that the welfare of the staff is protected. Thank you.
Okay, so in this instance, for example, I will just say staff number with card 248. This was 131,391. So who takes the liability? The staff?
Yes.
The staff takes the liability.
This is handled at the level of payroll, because the finance department would, in the manner that they pay the monthly salaries, any staff who exit, finance is notified and it hits the payroll. So it's the staff that would bear the cost of the excess.
Yes. So how do you balance that with the loan policy, where the staff should not take more than, is it about 50% or so? So how do you balance that? Because this one, it could create problem for you actually, because here you have somebody with over by 131,000, and let's assume this person actually also has a loan with GRA. So at the end of the day, wouldn't that threshold be over if you allowed it? If there is no limit to this, wouldn't that create a problem for you?
There is, and it's good that you have brought this 50-50 and it's duly observed.
Yeah.
So anytime this kind of advices are, or the CG minutes that let the extra cost be borne by the staff.
Okay.
Finance will also look at this in a comprehensive manner in terms of the liabilities that already exist.
Okay.
But a liability is a liability regardless of what it has to be recovered. So maybe my answer to this is that recovery would be made regardless of whether the 50-50 is there. We'll just ensure that the recovery is cognizant of the 50-50 rule that we need to observe, but it will be done.
All right. So then wouldn't this mean that you perhaps need to review your staff medical scheme? Because if a lot of staff are going over the amount of 30,000, and the cost of medication actually in this country or anywhere else in the world is also going up, maybe wouldn't it be time for you guys to take a review of that?
I think this is a matter that just came up. Is it yesterday? Just yesterday, this same thing was triggered in terms of management looking at this. But the quick, statement I made was, when it comes to matters of this nature, there is always a trade-off, because there is also a limit to how much, how far you can go in terms of absorbing this cost as an institution, because the resources are also scarce. But it's something that, we are prepared to look at again and see whether, we can, have the absorptive capacity to increase it a little bit.
Thank you. All right.
Thank you. Still surrounding the staff, as also an audit query in page 8. This one is about the staff loans. The auditor observed that certain loan beneficiaries did not provide title deed and mortgage document as stipulated in the loan policy. The auditor recommended for the full compliance of the management with the approved loan policy. How did you regulate that situation?
Thank you. Actually, it wasn't a case that the staff was given loan without that. Obviously, the auditors work on the basis of audit evidence, so the evidence was not available at the time. Basically, we had some changes, internal changes, and documentation at the time for this particular one could not be found when they were basically through handover process. This, for some reason, we could not find it. So at the time of the audit, when they wanted the information, we could not find it. But later on, we were able to trace the document, and it is basically on file.
Okay. Honorable Fofana.
Thank you. I would refer you to page 16 of the management letter, which is talking about controls on stationary purchase. So what the auditors are saying is, you don't have a running system that keeps the balances of stationary items as they are purchased. And then eventually, this can lead to there are some inherent risks involved, because once you cannot verify or you cannot ascertain what is the true value of the stationery, it becomes a problem. We've also looked at the management response, where management have indicated that they have improved on the system, and they have some requisition books, delivery notes, and then it also expressed the desire of the management to come up with an automated system. But the question I want to pose is, have you at any moment in time realized some discrepancies with regards to the inventory level of your stationery due to the managerial system you are having in-house currently?
The quick answer to that is no. We have not, through any review, had that. I think the issue here, it was not necessarily the final balance, but the historical balances of stock that they questioned, which our Excel could not do. One, we have updated the Excel to be able to give historical information, but that's just a temporary measure. What we have decided to do is to buy a software that will be able to we can administer for the purposes of inventory management. So we have just recently bought Sage, and we have an arrangement for them to train the relevant staff. And then once they are trained, we'll set up the system so that all the stocks will be held within the system. And then we use that inventory management system to run. So we expect that hopefully by the beginning of 2023, that first quarter, we'll be in a position to have already trained the staff, set up the system, transfer the stock, probably at year-end balances, and then start to operate the system.
Thank you for that response, and I'm really happy that you've purchased Sage. So I don't know whether you will really explore some of the modules in Sage, like the fixed assets register, which can easily, give a solution to the problem you are having currently. Yes, because you can maintain your fixed assets register in this one, and you will not have complication with IPUCO. But still, I would go back, because in trying to establish the final balance, you will find it very difficult, or if I'm wrong, you can correct me, but you wouldn't be able to definitely or actually establish the final closing balance if at all you lose track of what the transactions leading to that. And that is what the auditors are saying. This is why I posed the initial question. Because in any way, in between, you will have additions, and then you will have supplies added to whatever you started with to have your closing balance. So this is it, but since you are saying you do not have any problems with it, so I don't know, maybe you might be having some super system working in-house. Because I'm also trying to look at page 27 on monetary value of the financial statements. you realize in page 27 where you have the operational expenses. Both stationery and the cartridges, which are classified as consumables, all of them are stationary. So if you add the two in 2019, is in excess of 14 million, 14,167,000, and in 2020 is in excess of 14 million. We are not talking about what you started with, either in 2019 or 2020. So if at all of this, the transaction details were not there, and in between, there were no discrepancies as well, then I would say bravo to JRA. Or do you want to add something to that?
Maybe the only thing to add there is it's a combination of the Excel and of course these manual books that we have, where we are controlling what comes in. We keep a record of what comes in, and whatever is issued out, each department has a specific book for that particular department, and that goes, any requisitions go through a process of approval before they are approved and given. So there are other controls, but like I've said before, with life and with the history of the GRA, we always aim to improve and get better. And so the fact that we have acquired this software means that we are serious about doing that. And I think by next year, we would be in a better place.
On a final note, all I want to do is encourage you. Maybe you can start negotiations with the Minister of Finance to ensure that you have your fixed assets register in this stage as well, because it will come as a complete package, and that will definitely help, you know, and improve on the operational efficiency of your department. Thank you. Honorable Chair, back to you.
Yeah. No, I wanted to finish the HR part. There was one area we left behind. So
on HR.
Yeah, on page 11. Page 11. Okay. On the management letter.
Okay.
Yes, but for this particular one, I think we need to look at it looking at a bigger picture, because what it is saying here is like staff leavers account not deactivated from the medical scheme. But I think this perhaps question needs to go to the auditors, because previously we've seen that they did a good job in fact looking at the IT infrastructure of GRA itself, where they highlight a lot of loopholes in terms of when people leave, their IDs are not, activated, deactivated, or sometimes the passwords have not been changed, or change management here, disaster recovery, etc. But this time around, in this audit, I've not seen anything about that. Is it that they are perfectly done now, or what's going on? Because normally before they had some very, very good audit about that, and in fact it makes them actually improve on what they do. But this time around, outside the account not deactivated in the medical scheme, I've not seen anything that is IT related. And perhaps I said, well, I need to check. Maybe if they are 100% with IT, maybe we don't need to. Or why don't we have anything?
May I come in, Honorable Chair? May I?
Yes.
Thank you very much, Honorable Mbo, for the question. I know you have been interested in this IT for a couple of areas. That's excellent. Well, with regards to IT infrastructure at the Gambia Revenue Authority, we've done a test on that. But what we realized that there is not much risk, because they also have cloud system, and they also have manuals supporting the recoverability and the risk associated with the IT. That was splendid. But I want us to appreciate that the information contained in the management letters are based on sampling. They are not absolute 100%. Okay. With regards to the activation of staff that left the authority, well, we did our tests, and based on the sample, we came across that there are some staff who left the authority, but still, their details are not being removed from the Harris, the software they operate called Harris. They still have details within H-A-R-I-S. Yes, Harris. That's why we flag, because this is a potential risk area. Staff that left the authority have not been deactivated from the medical scheme. And when we do a further work test through, we found out that there is internal controls on communication. Yeah, I think departments need to communicate to each other to say X has left the authority, and then the system can be adjusted accordingly. But based on the sample that we've tested, that was not done. Thank you.
Thank you. Chair, the reason why actually I brought that, and I said we need to look at the bigger picture of that small activation. If you look at the challenges and recommendations from GRA, there's one instance they said internet failure, and I read from them, the constant internet failure continues to affect the smooth operation of the authority as it inhibits the this research and communication activities of the staff, as well as exceedingly difficult in accessing HRIS, that you just mentioned, and the leave portal, competency and medical database, and other IT systems of the authority. This is a big risk, actually. And that's the reason why I was questioning why you didn't go further to actually check the other systems. Because frequent internet failure actually would actually affect them, especially branches that are not within the Banjul area, maybe outside Banjul or up country.
The response came at the tail end of the audit.
Okay.
In spite, though, we need to have auditors' reaction to that responses. Because during the field work, we confirmed they have a cloud system that they can retrieve information from there. So reading these responses that they have indicated in the management letter report, these are auditors' reactions to that.
Yeah, the cloud system works on the internet. Without the internet, the cloud system will not work. So that's the issue I actually have, because without internet, the cloud will not work, because the cloud is, in fact, it's just an infrastructure stored somewhere outside the GRA premises, in the Gambia or outside the Gambia. That's exactly what it is, nothing else. So, and for you to be able to access that cloud services, you need to be able to have internet connection or some kind of connectivity to that infrastructure. And frequent internet failure would definitely affect them. And I was thinking maybe perhaps we're going to have something from the auditors that would actually see that the GRA actually have a business continuity plan, meaning if the internet goes down or some infrastructural issue, they have a plan B where they can actually continue to operate without that actually affecting their entire, operations. So, but anyway, maybe that's a feedback to you. Maybe in the future.
Yes, as I earlier on mentioned, the audit is based on sampling.
Sampling, yeah.
And we don't test everything in the first year.
Okay.
It's good that you brought in as an interest here. We look into it.
Sure.
The field work is still ongoing.
Sure. Thank you.
Thank you very much.
Thank you.
Thank you. If I may bring you back to page 8, still under the staff loan, but this time round, the staff loan provisioning. The auditor requests for the staff loan provisioning policy for further review to ascertain the basis of provisioning and ensure consistency on the annual provision on staff loan treatment. This was not provided for review. And by that, the auditor recommend that the staff loan provisioning should be developed and approved by the board to ensure consistency in the treatment. The response advanced by the management, which I would like you to shed light on, is the authority does not have an approved loan provisioning policy, but there is a procedure in place that is consistently applied on staff loans that are doubtful. What do you mean by that?
Maybe first to mention that in terms of loan provisioning policy, generally you don't have just like a specific policy only on loan provisioning, which is why we said when we review, we want to incorporate it in our loans policy so that it will be a section of the loans policy that will handle provisioning. But what we mean by consistently allowing, what we mean by saying consistently applying the procedure that we have in place for doubtful debts, doubtful from an accounting perspective, where there may be something that may cause the loan not to be recovered. So here, all our loans are secured, and we also have staff who are in the authority also backing those loans, apart from the individual itself and other security measures. But where, for instance, in terms of where I'm mentioning doubtful here, is a staff may leave the authority through sometimes, unfortunately, death or retirement. So normally we have recourse to get recovery through Social Security in terms of the final benefit payment. But we, at the level of the finance department, we would provide for the possibility that that money might not be enough to cover the whole loan. So in that case, it could be doubtful. So to that extent, if somebody, for example, passes away, in as much as we expect to recover through Social Security benefit, we will do a provision in the accounts. If by that time we had not received the money, we'll put a provision that it's a possible loss. But then when we recover from Social Security, we reverse it the following year. So this is a normal provisioning policy used by us as accountants and allowed through international standards. So to that extent, that policy, that procedure, I should say, we apply that consistently. So when anybody leaves, we would do this provision. When we recover the money, we reverse it. We had one incident of that provision being done, and when the staff left, by the time we were paid by Social Security, it was slightly short. So which meant that the provision took care of that shortfall. So it's about not allowing a shortfall to occur, or sorry, not allowing no charge to the accounts by ignoring that provision. That's why we do it. But we accept the fact that we need to embed this in a policy, and based on the response, we are saying that we are going to include it in the loans policy at our next review, so that it is a feature of the overall loans policy.
And when is your next review?
We are likely to have that by first quarter of 2023.
Any further question on that? If not, we can go to another issue. Yeah. Still surrounding management letter?
It's a different issue.
Uh-huh.
It's a different one.
I think we have 1 or 2 points on the management.
In the management letter, of course.
Okay.
With the governance.
Governance, okay.
Yes.
I think that's the...
On page 13.
Last one, yeah.
Okay. It was also noted that the GRA Finance and Audit Committee meeting minutes were not signed by the chairperson and secretary to the committee. And I ask, why is that happening? And also the GRA committee meetings not provided for the committees, for loan committee, budget committee, reform and modernization committee, and cleaning agent committee. Will they be able to tell me exactly why this is happening? Will it be authentic when meetings or the minutes signed by the secretary and the respectful chairperson?
Basically, we accept the fact that for some of our committees, which are the ones they listed, we did not have properly prepared minutes that are signed by both chair and and secretary to the committee. There are, of course, other committees that this thing happens. For these particular committees, it was more based on the way we worked. For instance, for loans, based on whatever loans we were going to advertise or work on. For instance, car loan, we would go through a procedure, and the procedure is all laid out in the loans policy. And once we go through that policy and do the necessary memos to invite staff to apply, and they apply, we collect those application forms and we meet as a committee. So when we meet, we basically look at everything based on the applications. We follow all the steps that are in the loans policy and look at things like this 50% rule Honorable Mbo mentioned earlier, all of those things. And then when we finalize and decide on, for instance, those who qualify and can be paid, we take action by writing the necessary memos. And all of these things go on a loans file. But all the elements that were decisions of the minutes are done and put on that file without actually having a comprehensive minutes or comprehensive minutes to show, as you said, authenticity in a sense through the signatures of the chair and the board. So perhaps we were more just going with how we have been working on these particular committees, unlike some of the others. So by the auditors making this point, it obviously has highlighted an issue that perhaps in the past we had not really paid much attention to. And now management is taking care of that and having these minutes done and filed.
Honorable?
Yeah, yes, thank you, Mr. Denton, for this on the same issue. I assume that these committees are paid whenever they do some kind of work. I assume that, right? Some kind of allowance, I mean.
Yeah, there are cases where honorarium may be given.
Yes.
Yes.
Okay. So what I'm saying is like maybe perhaps as another control mechanism, since you have a lot of layers of control, you wait for the minutes before you pay them. Like once the minutes are done, they submit the minutes signed by whoever the chair is, and then you pay.
Yes, that's an idea. Noted.
Okay.
Yes.
Okay.
We'll take that.
Oh, you are only interested in attendance list. Okay. Now, having taken note of that, I think last on the management letter, issues surrounding the implementation status of previous period audit findings. Oh, do you have another before I conclude on that? Okay.
You know they have challenges. We need to look at their challenges, and then see what we can do. And there's one particular area which drew my attention. That is the taxpayer voluntary compliance remains low, especially with regards to timely filing and payment and record keeping. In particular, some public enterprises continue to fail in fulfilling their tax obligations as expected of them. That's the...
Oh, that's...
Oh, so that's... No, that's fine.
Yeah, we will come to that activity.
We can come back to that one, yeah.
Okay. Then on that, I think 3 issues were highlighted. 2 under fixed assets. That is the assets without description, location, or reference, and fiscal verification. Then the 3rd one is the performance appraisal. It happened that out of the 3, 2 already has been addressed by the management. Only but 1 has not been addressed by the management, and as the asset without description, location, or reference. As at now, I'm not sure whether as at now, but as at 2020, that had not been addressed by the management. What's your take on that?
I think for that one, some of those relate to issues of the past. Maybe if I just explain that when GRA was formed and customs and domestic taxes merged, we had period balances. We had balances that related to the assets of the authority. And some of those balances did not go into detail in listing the asset type and asset balances. So which meant that you have totals for specific total balances for specific assets. So unlike motor vehicles and the like, with those we had some costs. So there were areas where we did not have specifics, and for us, particularly this management, in the years we took over around 2012, 2013, we started to build a fixed asset database. And from there, basically, we initially it started to be batch cost. Like if you buy 5 computers, it would be 5 computers at X amount. So those things were recorded as such. So whereas if you want a typical asset database, you have to list the asset and each individual cost. So the challenge we had by then was that we did not have that information. But we started to build from then coming forward, which means, the issue is not that of what we have built coming forward, but some of the issues of the past. But with the typical scenario of the depooling of assets, as some of those reach the age of no use, and perhaps without any record that they are being used anywhere, we are taking them out of the pool. And so which means that moving forward, we'll get to a point where it would only be every single asset would have its own list of what they are, where they are, and the actual cost, as we would put in the fixed asset register. So I think this is more an issue of the past than current. And by the very nature of how we are operating, those will drop out from being several years ago under operation and no longer being used. But basically that was the situation.
You say it's more of an issue in the past than present. So that's what I'm trying to say. What is your situation as at now? That's why I said.
Okay, as at now, as we procure, any set of assets that we procure at any given time, through the requests, through the vouchers, all those relevant details are there. Through procurement, when they do the purchase order, they list each asset in terms of the asset type and its cost. So which means that we have, at that point in time, we have the exact cost of the asset and its description and where it's going. So from that point of view, my department, we pick the details from that document and update the fixed assets. So each of the assets are listed with individual details in terms of the type, the cost, and the location. So we are doing that.
Honorable Fofana? Okay, we'll go ahead.
Thank you, Director. So proportionately, how much with regards to value or percentage are we talking about?
I can't tell you exactly, but it's not I don't think it's a significant amount, no. Because most of those ones have even kind of outlived their lifespan. Yeah.
Okay. at this juncture, we may move on to the issues surrounding the activity report. It can be better guided by the second document, that's the analysis from the SMS. And they will charm the other document now. We're almost getting to the end. Yeah, we don't have much issues in that. Yeah, it's open now.
Okay. Okay.
Yes, I can see that.
No.
We can still serve you coffee.
I will just refer you to page 23 of the activity report. But to start with, Honorable Chair, I would like to congratulate GRA for a very brilliant performance, given all the challenges that you've gone through during the year of 2020. Haven't gone through the activity report. One can't say much, but just to say that we are all impressed. But notwithstanding, there are a few areas that we would like some clarification on. In page 23, the third paragraph of the activity report, of the third paragraph, it reads, the performance of the authority during the year, despite the challenges of COVID-19, has been boosted by the upward revision of the custom values, strong performance of oil receipts, and the intervention of government, NGOs, philanthropists, and private individuals to assist the population, and then it continues. So what I've underlined there is the upward revision of custom values. So I don't know whether we can simplify that term into specifics as to which classes of taxes were revised, and proportionately what was the percentage increment as well.
Okay, thank you very much. That's a very good one. Maybe it is in the manner in which, we express the language. So what we realized was there were some loopholes to close. Like, the valuation in terms of, the values that we use to determine what is payable for duty, VAT, and other things is based on what we call cost, insurance, and freight. And that is the cost of the goods overseas. Insurance, freight is basically the shipping charges. So what we realized was a lot of them, the values they were reporting did not truly reflect these transaction costs. So we did our studies knowing that it was COVID year and we were challenged in terms of revenue mobilization. We hit them on that. We tried to get the correct, amounts they were paying depending on, the origins of these goods. We put that together, and then we also look at the freight charges which were prevailing at the time. So the adjustment was basically to reflect the true transaction values at the time, because that's why COVID also came with its own blessings. Because we were stretched, we had to go and close those under reporting they were doing at the level of the international trade. So this was mainly an adjustment to reflect the true transaction cost, but not any additional increment in terms of charges.
Okay, thank you for that. But still on it, I want to know, maybe you can understand us to know where the adjustments were done. Was it on the face of their, I understand what you are saying. They can procure or they can purchase goods at 100,000 and do their own invoicing and report 50,000 to you. In that case, the value they should pay in taxes will reduce. So, but now what I want to understand is that revision, was it done on the face of the invoices that they were presenting it to you, or you revised the rates based on the classes of what consignments you were receiving?
On the rates, that is not our prerogative. The rates are prescribed by law. We can't change that. If the rates have to change, they have to come to you. You have to, even at the level of the ministry, it can only come as policy proposals, but it will come in the manner of through the budget speech, but you have to approve that. So now going to the adjustments that I'm talking about, what we looked at, we did not look at individual by individual, importer by importer. we look at, like I have said, the three elements: cost, insurance, and freight. And we have the historical information about where imports are sourced. So we try to ensure that for all these origins of the imports, we know what is the true, freight charge, what is the true, among the goods that normally come, we have, we are able to get an idea about the transaction cost. Because at the end of the day, the valuation should be based on the original invoices, because that is the true reflection of the transaction value of these imports. So like I have said, because we realized a lot of them were cheating, we just made sure that we got this information and put it in our database. So when you submit an invoice that conflicts, with the information that we have gathered, we press you, go and bring the original invoice. All our indicated values have to be used for valuation so that we don't lose our revenues. That's what we did. Yes.
Thank you very much, which means you give them options. If they don't bring it, you use your indicative values. Okay.
Okay, maybe let me expand on that. The regime we run is called self-assessment. So it's like the importer or the taxpayer has full right, full powers to make declarations to GRA. So the only way we can contest that, we can only contest that with authentic information. Otherwise, whatever they submit stands. Because we also, it's not like, we just have the powers to say it's this. They have to come, and we can only put that aside based on credible information that we have to set aside the assessments they are making.
On it. I fully agree, and I think I have some questions on self-assessment, but when we get there, we'll ask those ones. But why I'm asking this is because there's a lot being said that currently the turnover at the port is low because of what? The hike in the taxation. So if at all we receive a report which says the upward revision, and this report now is public knowledge, then one should seek for clarifications altogether. So now what we have, or what we know is, you've developed your own verification benchmarks. If they bring you anything and you believe there is a gap, you give them an option to tell you the truth. If not, you use your indicatives. Okay, which is good. I hope it works that way also in the self-assessment, because when we get there, we'll have some interactive discussions, But what I want to say now is, let's translate this into realities in economic activities. How did this upward improvement really translate into the number of transactions you have with regards to the custom duties? Did you see an increment in it, or did it result in a net reduction?
Okay, I can just give you a quick answer. Maybe let me go back to my some of these tables, what I see on the revenues. If you look at by department, I gave a breakdown in terms of the revenue performance. And I said the Customs and Excise Department total revenue collection for the year 2020 total 6.7 billion, exceeding the target by 12%. And I also, said that nominally they grew, the department grew its revenues relative to 2019 by about 571 million or 9%. So that is telling you that what we did really paid dividends, because this was COVID year. We had issues with our volumes, and yet our revenues were able to pick up, particularly, registering an increase relative to the previous year. It was mainly on account of these loopholes. But let me hasten to add that this was not this was nothing to do with additional layers of taxation. It was basically a matter of correcting for, undervaluation or under assessments which they were submitting to GRA. So the onus usually is on the importer to provide the original invoices. So where they provide them, we have no case. We have to go by that, because that's what the law says, that the valuation should reflect the transaction value. And the transaction value is whatever the original invoices indicate. GRA cannot do anything, because that's what the law says, and we also have to respect the law, in as much as we need to mobilize more revenues, but it has to be within the ambit of the law.
Which I did say last, but take this one as the last one. I strongly understand the increment that you've provided is explicit in the report and is in terms of value. But I was talking about the number of transactions. Because that increment, if you go out, they can easily tell you is as a result of what? The increase in what? Prices. But we know, as a government, everything we are trying to do is to provide a conducive environment. Altogether, have more transactions, even at a reasonable value over time, you can increase your what? Collection. That's why my question was, how does this translate in the increment of what the economic transactions you have down there? Does it result in a reduction or what? An increment?
Okay, the answer I would give, definitely 2020, our volumes were really knocked down. We really had issues with the volumes because as the COVID was also hitting, we also realized some, increase in terms of the, the commodity prices. We saw a general rise in a lot of these because a lot of these countries also we are discouraging exports because they wanted to cater for their populations. So our volumes were really hit, but whatever additional revenue that was mobilized on account of this, like I've said, is only based on those that we detected. We are not doing the right thing. That what they submitted was not reflecting, But in terms of number of transactions, in terms of volumes, the statistics indicated that we saw a reduction in the volumes. So I can say apart from those things that we have said, but we also have to give credit to the fact that, we have automated our custom processes, so we have also realized some efficiency gains out of that.
Thank you. Thank you very much. And we are still on the activity report. On the activity report, we have few issues. One on the Treasury single account, which is reflected in page 57 of the report. And the questions are: one, as the interfacing of the Treasury single account payment platform with GRA revenue collection and accounting been completed? And two, have the MOUs with the commercial banks revised to reflect the implementation of the Treasury single account? That's the two questions on the Treasury single account.
With respect to the interfacing, we are not there yet. There's been revisions done on the MOU, but again, that is not totally finalized because it has not yet been fully signed onto by banks. So I would say that for us at the level of the GRA, we are not the pace setters or the ones in control of the TSA, but as a stakeholder, we are part of the committee. Currently, the work that is going on is more or less around the issue of the payment, the building of the payment gateway. We haven't really gotten to that stage where everything is set. So at the moment, from what I'm hearing, they are targeting beginning of next year. Whether that would happen or not, I think you might want to keep that question for, I don't know whether it's Ministry of Finance, maybe, or Accountant General, yes.
Okay. The contract, the building contract with GRA, with GAMWorks. A delegated management contract was signed with GAMWorks in January 2020 for 2-story and a later to 3-story building at a tune of 22.053 million. We would like to know whether that building has been completed in the said year 2020.
Chair, I'll be very happy to answer that question because that building houses my new office now. So I invite you to visit my new office to appreciate that building. So not only am I there, but there are other departments that have moved into the building. So, but we'll be very happy for you to physically, visit and then, appreciate the building yourself. Yes.
So that is to say,
yeah,
the building was completed.
Yes, and it was inaugurated in June of this year by the Honorable Minister of Finance. Yes.
Laudable.
Yes, but please find time to visit. Thank you. No, this one is just here on your way to the just next to the GRA main building here. It's a new one. You cannot miss it.
There is payment.
Yes.
There is payment allocated to clean up GRA buildings at a tune of 3.4 million in 2020. This appears to be huge. Can you shed light on it?
Sometimes with numbers.
Oh, you are back.
It appears huge, but basically it's for cleaning. GRA, we are widely spread. We have a big building, of course, at the headquarters. Then we have Kanifing, and then you spread 𝒂𝒏, Brikama, Bansang, Basse, all of these offices that we have, which are quite a lot. So this cleaning cost is for that. Basically, the bulk of that is through a cleaning contract, a private operator. But then also there are areas where it's our own staff who are cleaning, basically directly employed by us. So the cleaning costs of the materials that we buy and stuff like that, all of that together as a total is what gives you that amount. So, but it's for all the offices that we have across the country. Yeah. Chairperson just whispered to me, maybe just to add that for that particular contract is through competitive bidding approved by the GPPA, so it's not just us giving it out.
I would go back a little bit to the new office by GAMWorks. You would say congratulations on its completion. But in the activity report, it was realized that during the year, the value for the contract was increased from 13 million to 22 million. So the question would be whether we really sought for the necessary approval, because that was not indicated inside the report, yes, and what necessitated it. Because all we saw was the shift in value, yes, but the circumstances surrounding it were not definitely highlighted.
Thank you, Honorable. The necessary approval was obtained. But, down the line, when we initially conceptualized the project, it was not meant to add, the second floor. So later we realized that, we have to think about the future in terms of staff, growth in staff numbers, just to make sure that the space is there. We will not be constrained in the short term. So we added an additional floor, and with that, led to the variation in the cost. And then my director is telling me that we also added emergency exit, which was not part of the original, design. Yeah. Yes.
Yeah, you can. Yes.
In that case, Honorable Director, I will direct you to page 25 of the activity report, which is talking about the digitization of the process. Page 25. Partial leave. Okay. Can I proceed, right? Okay. Let's look at, I can just tell you what I have offhand. The main relevance of this section is, it is really showing us the desire of management to digitize the revenue collection process, which is very, very important, because the moment we reduce the human interface, we can optimize our collection. Okay, and eventually we all know, because in the DG's report, he stated there that it is from the collections of GRA where government projects and then developments are what? Executed. So the relevance of the collection by GRA cannot be overemphasized. But why I'm asking this question is, in the tail end, you will realize that there's a portion where you said it is observed that challenges related to project management had contributed to a great extent to the delay in the delivery of deliverables. Again, on the same page. I don't know whether you are saying it. No, that's still in the first paragraph, where you have the GAM tax net upgrade. The last sentence there. Okay, maybe I can help you. The first sentence, second, third. It says the project was for 1 year, however, only 3 modules, which was the registration, payment, and returns were completed. It says the non-performance of the system continues to affect a stable revenue mobilization. So what I want to ask is, how far is GRA going on with what? Digitization. Yeah.
Okay, thank you, Honorable. Here we are reporting in historical perspective. We are in 2020, and then, we are relating to what had transpired in 2020. So at the time, I know, this project, had some takeoff issues. But as we speak, we call it the GAM tax net enhancement project, because what happened, with the help of the IMF, an assessment was done on the system, and they were, through that expert assessment. So, the defects or the shortcomings in the system were documented, and then a project, was, designed to address these problems. So as we speak, that project is fully implemented, and, we have reached the closure point of that project. Now we are looking at another step that is moving from this system as it is, to an integrated tax administration system. And this is also, a project that is funded by the World Bank to the tune of $13 million. Because this one, will be more sophisticated, because it is going to be web-based, and it is also going to come with other, facilities that are going to favor the taxpayers, like e-filing and e-payment, because now what we want is to reduce as much as possible contacts, human, contacts with taxpayers. Because as I speak now, the filing and, the filing is done, physically or manually. But with this system in place, once it is fully implemented, then we will have e-filing, e-payment, and, and also mobile, payment facilities for the small and micro taxpayers. So this was the situation in 2020. But as I speak now, it's a completely different ball game. We have moved away from this project until we are implementing a new one that is going to be web-based.
Thank you. That's good. And in the report, I've seen somewhere where it said that over 95% of your operations are digitized. So one of your challenges is the porous borders. So where are you still? In which areas of your operation do you have manual collection of revenue still now?
Okay, the issue of the manual also, we go back to, the system that is in place. Going by this RTGS. Now in the Gambia, for all payments that are above 100,000, they have to be done, not through the manual process, manual cashiering process. That alone has really reduced, anything to do with, the physical, cash collection. So wherever it can exist in any of our offices, but then, it can only be below this threshold. But I have also, indicated in my report yesterday that we have our system sitting in all the banks. Because what we are also avoiding, a taxpayer coming to give us money, we take that money again and take it back to bank. So it's more efficient. They pay, from the level of because all these taxpayers, they all have accounts. All you need to do, advise your bank, you do RTGS. Or if you don't want to do that, our systems are there where you pay our account is credited, and then you get a receipt. You don't even need to come to GRA. So we have created these facilities just to ensure that the issue of money passing hands, is more or less a thing of the past. We have kept it to the barest minimum possible.
I'm done on that issue.
Yes, thank you. Do you plan to completely phase out that cash transaction with GRA, where you don't want anybody to go make any kind of payment with a cash or check? That anyone that wants to pay, even $10 is, you have to go to the bank. Do you plan to have that, and how soon do you plan to do that?
That is what the the ITAS anticipates. Okay, now even if you look at the Asikuda wall now, it has more or less dealt with that. So, but as a matter of policy, that's the direction we are heading. We don't want to deal with taxpayers directly. The ITAS also will come with e-filing, e-payment, and on the tax side is filing and payment. Once you do that, you don't have any other business with GRA except if you are profiled for an audit. Otherwise, once you do that, then you just obtain your clearance. Even that clearance, we'll try to digitalize that so that you can just obtain that from the system. So the feature is no contacts with taxpayers. They will just utilize our systems to carry out whatever, discharge their compliance obligations.
Okay, is that contained in your strategic plan, or that's not part of the strategic plan?
Yes.
Okay.
It is very visible in the strategic plan.
That's fine. Thank you. Yes, honorable members. You were on page 27, right? Okay. But if yeah, go ahead. Yeah. Yeah. No, sir. Yes. Actually, personally, I have issue with self-assessment. In fact, I think if you listen to my intervention in Parliament 2 weeks ago, I think I spoke along those lines because people generally, anywhere in the world, they don't like to pay taxes generally. So for me, the policy of self-assessment, for me personally, I think you need to review that. At the level of the ministry, I don't know, but I think that's something we really need to look at. Because if you leave people to assess themselves, just like you were saying, and in this day and age, you can go online and check, for example, prices of anything almost. And that's why I like the idea when you said during the COVID, that's exactly what you end up doing. If they come with an invoice and you realize that this may be too low, then you tell them to go revise, or you go apply what obtains online. So I think that was a very good thing. So for me, but I think, do you plan to have that actually change, where you actually, reduce that completely or eliminate it completely?
I tend to completely differ from that advice because historically that's where we are coming from, and that is called administrative assessment. And what that also do, it increases the cost of tax administration. And now, the reason why the departure from what we call administrative assessment to self-assessment is two important things are there. One, to empower the taxpayer, and two, the taxpayer is the one doing the business. They are the one having their, doing their transactions. So what the self-assessment try to do is, since you know what your business is, prepare your accounts. If you are able to audit them, get them audited, and there is an incentive for that, because when you present the audited accounts, you pay with a lower rate on the turnover. So the whole idea is for the taxpayer to take charge. And I think in terms of justice, it is better. Imagine now we sit and then we go back to the days of administrative assessment. There can also be an element of injustice and unfairness where we impose a liability that is not in line with the performance of the business. So, but there are controls or risk management aspects to that, and that is why when self-assessment came, then two fundamental issues have to be addressed by tax administrations: to do proper risk management and also capacitize the audit units, so that they also increase their scope in terms of audit, so that those ones that are not in line with the law, there are also punitive measures spelled out in the law, where even when the liability is established later based on audit, it comes with penalty and interest. So, but I believe this is the best in terms of fairness for the taxpayers. to allow them to self-assess, because the business belongs to them.
Okay, we'll take your word for that. But on average, you know, once they do the self-assessment, on average, you know, when you want to do further checks on them, on average, percentage-wise, if you don't have it, it's fine. Out of all the institutions that you have registered, on percentage-wise, how many do you actually go back to check on about their audited accounts?
Unfortunately, I cannot volunteer a percentage, but what we normally do every year, there is an audit plan. So the audit plan, you know, is done at the beginning of the year. And then because, you know, like my brother talked about, there is no way that in any one particular year we can audit all the taxpayers. So we sample, but we also concentrate our audits where there is, you know, more value for money, particularly the larger ones, which, you know, at the end of the day, an assessment could, you know, give, you know, provide us with millions, rather than spending our limited audit resources on the informal sector. Those that even if they are audited 100%, you know, the contribution will not justify the costs that we deploy in doing those audits. So everything is based on plan, and we try to increase that coverage, because that also, you know, goes to, you know, how to call it, increase the level of voluntary compliance. If we have our way, everything would be voluntary compliance. People will respect the law. If you have an obligation, you just discharge it, and GRA will not have to do all these follow-ups. But up to now, there is a lot of, you know, forced compliance attached to this, where we now have to go physically to, you know, to collect these revenues.
Yes, go ahead.
Thank you. I like this point, because this is where GRA needs our support the most. To start with, I agree with you. Self-assessment is the norm. But now we have to ask ourselves, how far is GRA able to look at the accuracy of the returns that is coming to them? This is where the question is. And again, you've stated that you do not have the resources, either in terms of human or whatever might be required, to make sure that you go back and then thoroughly look at those returns which are being submitted based on self-assessment. Let's take a classical example. You have a lot of corporate institutions in this country, corporate companies in this country. Some of them will make returns based on self-assessment of millions of dollars. But at the end of the day, are you able to have an invisible eye that will interface with you and tell you, yes, it was self-assessment, but yes, this is acceptable, or no, the range is very, very, very wide, it's very, very big. I think an anomaly have happened which should trigger an intervention.
I think that's a good one. So, you know, for these things, you know, the life of the taxman and the taxpayer is the game of the cat and the mouse. So anytime you control one area, they also come with another, you know, innovative way of beating the system. So one thing that we have done for the large taxpayers, which account for the bulk of our revenues, where you have the telcos, you have the banks, you know, those kind. So now there was, I think it was either 2020 or 2021, I think. We included in the budget speech of the minister, it was a revenue measure that for all large taxpayers, those that are in the LTU category, all of them have to submit audited accounts. So that has reduced maybe some of these problems, and also the pressure on our limited, you know, audit resources to go and audit. So because at least even where our audits have not gotten there, we are a sort of getting, you know, accounts that are properly audited. So for LTU now, there is nothing like, you know, submit audited or unaudited accounts. It is compulsory that they must submit accounts that are audited. So going forward, you know, we have also been benchmarking with other tax administrations like Rwanda. And what we have realized, they have used technology to their advantage. We saw for a lot of these taxpayers, almost all of them, they have what, particularly those that have, you know, high transaction values from the particularly retail outlets. They use these automatic billing machines. And then, you know, they are supported by servers at the level of tax administration. So on real-time basis, these, you know, transactions are going to the revenue authority. Even prior to returns coming, you have a significant element of what needed to be in the return. So what those tax administrations now are doing is just to cross-check, because they have a data warehouse where now they would cross-check these returns against, you know, the data that is sitting at the revenue authority. The other thing we have seen they have done for the VAT, for example, somebody can come and claim to say, these are all VAT I have paid on account of purchases I have made for those that are registered. But through technology, they are able to, on real time, as you know, cross-check and see whether those purchases were genuine purchases. They could link them to the sales of wherever they said they have sourced this. So the future is to leverage on technology to deal with these gaps. But human intervention cannot solve this.
Thank you. And the third one you left out with Rwanda, I will bring that to your notice, which is very important. You said these corporations will normally submit their audited financial accounts. These audited financial accounts are extracted from what? The accounting package they are using in-house. What the Rwandan RRA are doing right now is they make sure that all the companies in Rwanda uses an accounting package that is approved by the revenue authority. Okay? They give you the package, or if you bring your package, they are the ones that approve it. Because in that case, tomorrow, if you send your auditors to go to those what? Institutions, they will have the technical wherewithal to go through those systems efficiently and extract it. And then we can equally do it. Because I was part of the trip that went with your staff to Rwanda, and then the way they mobilize their revenue, it's not magic. It is simple. They just make sure that they have efficient controls which are working for them, which are definitely working for them. That's where the mobile operators come into play. But I strongly believe that we can start even with the accounting packages. GRA can just sit down and say, okay, now we are approving QuickBooks or Sage or this, knowing fully well that their audit staff have that capacity. I can be an accountant in a firm. If you believe like the returns we are sending, I mean, it's slow. When you come, if I told the audit staff that GRA is sending don't have what the capabilities, they will rely on me. I can easily export my returns to Excel and then give it to you and make sure I correlate it to the returns I'm doing and leave you with a little gap. What will be there? But if you approve the system based on your in-house competence, then we can rely on the self-assessment. But as it is now, I would agree with Honorable, the self-assessment is not reliable. Of course, I wouldn't say let's do away with it because it is the best option we have in hand. But the question is, how do we improve on our control mechanisms? And to that, it should not be by magic, you know?
Honorable, I'll come back. Technology is the solution. All these tax administrations that are champions, they are only champions not because of the qualifications or the professional training that the staff have. Is the extent to which they can leverage on technology to do this in a very efficient manner on real-time basis. So, for example, now, you know, you have just, you know, from your intervention, you know, when you look at the situation in Rwanda, even in the absence of returns, they already have information about the taxpayer which they can use for enforcement to go and collect. So they don't need to wait for you to bring a physical return. They already have a return. So technology is the answer.
So when will GRA start that technology?
Yeah, no, maybe you missed that one, Honorable. That's the ITAS I'm talking about. Is similar to what is they call them integrated tax administration systems. So this project with the World Bank is what it is trying to achieve. Yes, thank you.
Exactly, and again. Yes, and again, you know, you can clearly see where we are coming from about self-assessment. It's about the efficiency, whether people will be honest enough to be able to do that. But you should not be trusting anybody right now. That's why you need to have a plan B to check. So hopefully the GRA Act of 2004 hopefully they will come with some amendments to ensure that you have the powers to be able to do those things, you know. So, so I think that should be fine. So essentially, do you have anything else? You always say last. No, wait. No, he always say last. He's going last. No, you always say last, so you're going last. Yes, go ahead. No, any other issue. Okay.
Yeah, the vehicle management policy and procedures, which is on page 50, is it contributing to effect and efficient transport management and maintenance? The authority is reporting 23.665 million for purchase of fuel and lubricants, as well as 9.044 million for vehicle maintenance during the year under review. Is that okay?
Management on the management letter.
It's on the management. This one.
On the activity report, yeah. 50. Transport management, yeah. $50, yeah.
I mean, is it contributing to effective and efficient transport management and maintenance? That's the question.
Yes, because, you know, for us, you know, the vehicle management is not on ad hoc basis. We have a whole department that is responsible for this vehicle management. And we have systems in place to ensure that, you know, the vehicles are properly managed, and those that are no longer roadworthy, we consider them for auction. So, yeah.
Yeah.
Also, a key part of that, from a vehicle management standpoint, is the fact that the HR department, HR and admin department, manage all the vehicle fleets, particularly in terms of servicing. All of them go through servicing. They have service history. In other words, all the various mileages are kept so that due dates for services are done. And that sort of thing obviously helps us very often in making sure that vehicles are in good shape before they just suddenly break down, for instance. So the insurance, the pool vehicles, all of that is the essence why we have the vehicle management system. And of course, in terms of linking it to cost, by basically looking at the vehicle history, sometimes we are able to tell where vehicles are reaching a stage where they are being too expensive to run because of frequent breakdowns or any perennial issue that may be affecting that vehicle. So which means that at some point HR would recommend for that vehicle to be taken off the pool because of on-road worthiness. And this may lead to an auction and a replacement. So yes, it is indeed working for us.
Thank you. And with a total operational fleet of 74 rather, which is 78 minus 4 grounded, this appears to be very high indeed. On average, each vehicle is costing $26,650 to fuel and $10,000 for maintenance every month. I think we need to look at this vehicle, their vehicle running cost. Honorable Chair.
Maybe before that, with your kind permission, Chair, you know, you have to also look at GRA. Our operations are very mobility intensive because a lot of it has to do with enforcement activities. They just talked about the self-assessment. I will agree. The self-assessment is the best way to go, but, you know, it also anticipates, or, you know, there is presumption of high level of voluntary compliance, and that is not the case in the Gambia. So you have, even though people are aware of, you know, the law, but there is, so the incidence of, non-voluntary compliance is huge. That also, increases, our mobility needs. So for us, the vehicle that we maintain are also a function of, the kind of operations we do, which are countrywide. We are present everywhere where economic activities are taking place, where we need to mobilize revenues for the state.
Yes.
That's a genuine answer.
Thank you. Yes, you want to come in?
Thank you.
So you said that's your last question?
Final.
Final. Go ahead. Okay, go ahead.
Thank you. No, that's the final one. Yes, and normally you keep the big one for the final question.
Yes.
So I think we'll end where we should have started. That's about accounting for revenue. Because this is basically the primary mandate of GRA. It's all about revenue collection. And to that, I would direct you to page 60 of the activity report. Page 60. 60. Having listened to the Deputy DG, I think we will all agree to the fact that GRA have taken some positive steps towards reducing the human interface, and basically the motive behind that is to bolster the level of revenue collection. But what I want to ask here is, if you look at the last paragraph, it says, as part of the monthly procedure, tripartite reconciliations were also carried out by the FAD, that is the Finance and Admin Department, staff with representatives of EGD and the Ministry of Economic Affairs. You realize this is part of your core competence and it is not covered by what? The audit. Currently, the only thing we are auditing now is what you are subvented, but your returns to MOFIA is not part of the audit. But it will be of interest to the Assembly as well to know how is that faring. Do you have challenges there? Do you have difficulties? And what can we do together to make sure that we improve on that?
This one is very useful, in the sense that, we believe this, issue of revenue mobilization. We have the mandate, based on law, because, the agency is the agency established by government to mobilize the state revenues. But taxation is such that, it has to be collective responsibility. We all, in our own little ways, can contribute. And where the contribution is most important is, the level of awareness, awareness creation around, the tax obligation, and to motivate people to realize that, paying tax is a very honorable tax, in the sense that, everybody who contributes towards this also directly benefits, from your contribution, because there is nothing that a government can do on its own. Everything requires that public investments have to be made. So the public goods and services that we consume are coming from the taxes. Even if we have grants or we have loans, the loans component would have to be, repaid based on the, taxes that are mobilized. So on the side of the Assembly, we really appreciate the support that you've been giving over the years, particularly when we bring our bills here for consideration, that they are in no time they are being considered, and we are able to use those laws, because anytime new laws come, they are there to improve on our operations by taking care of loopholes that are not covered by the law. The other part, we know that you have a big following, because as National Assembly members, you are interacting with the whole constituency. So if you can include the tax awareness as part of your agenda in all the engagements you have with your constituents, we will definitely appreciate that. Because right now our biggest challenge is, like I have said, voluntary compliance, and we know that is only there because people still don't appreciate the full benefits of all these public investments that government is making. So for me, I think that one I need to bring out. But I have to say that we have always enjoyed the support of the Assembly, and we look forward to that support going forward.
Okay, thank you very much. Yes, have a wonderful day. Thank you. All right. Now, on the same issue, on revenue, Because if you check actually from 2017 to 2021, for example, you will see that the year-on-year basis, the rate is increasing. And if my math serves me right, from 2017 to 2021, I think it was increment almost 70% plus from where we were and from where we are now, which means there is something that's working at the level of GRA. What is it that we can do, Parliament, the Minister of Finance, to ensure that this is actually even doubles? For example, right now we are talking about 12 billion in the year. What can we do legally, us and the Minister of Finance, to ensure that we move from 12 to 18 billion?
Okay, now, first one I would request is the public enterprises. Anytime they bring their accounts to you for scrutiny, any liability that exists, a corporation tax liability or any liability that exists in the nature of tax, please help us to recover that. Because these are, enterprises that in one way or the other are benefiting from the state because they are created by the state. And so the minimum that was expected was that, if they cannot pay, dividends to government, they should be able to meet their obligations under the law as far as taxation is concerned. And some of them are private sector operator. So it doesn't help, if the private sector, they have no choice, they are receiving our closure notices, and all these kind of things. And state enterprises are hiding behind, the government because of they are created, established by government based on law to shy away from their obligations. So we please want you to look at that item. Okay. Any one of them that has issue regarding tax. So if you can be of assistance to help us in the recovery efforts.
Yes, that's number one. So any other one? Because these are areas that they need to pay.
Yes.
Government and non-government.
Yes, certainly.
Okay, so number one. Any other thing?
Yeah, maybe the other one I had mentioned it in passing, and because we'll be coming here, of course, with bills.
Yes.
That in the event, our bills come, please, give them priority. Because any bill that comes is a bill that relates to, enhancing our capacity to collect more revenues for the state. Okay. Yes, but the other one I said, in your engagements at the constituency level, please help us, because one typical area where we've been suffering a lot is on the disposal of capital assets. Okay. A lot of people are selling this landed property, and all of them, should pay capital gains tax. A lot of them at the level of the alcalos, once they get that paper, they are just okay with that. Okay. So if more, we've been doing that. As I'm speaking now, our team, they are in CRR, trying to engage the local community from the local governors and others. So we target, so that, we increase our level of sensitization. But that is an area where we are losing a lot. Where people dispose of this landed property, and it will not complete the cycle in terms of the payment of capital gains tax. So if you can sensitize the alcalos more, that before they, put that signature, they ensure that these people, do whatever they need to do in terms of paying the capital gains tax.
Okay.
Thank you.
Now, do we also need to look at the tax waivers that is done by the Ministry of Finance?
Yes.
Do we need to look at it, or it's fine?
Yes. No, please. Please, yes.
Okay.
Please, yes.
Because the reason I'm saying that,
yes,
I know in the Constitution, Section 179, subsection 3, we've given that, to the Minister of Finance to do, but it's becoming a concern. In fact, we've highlighted our concern because the last time I think I checked, we were dealing with 29 or 2020. I cannot remember the exact, but it was over 2 billion that they have to waive. Okay. But this year, I think they told us about 1 billion plus already.
This year alone. Yeah, this year alone, it's in excess of $1 billion in terms of increment relative to last year.
Yeah.
We have so far registered 88% increase.
Increment, okay.
In terms of, the tax expenditure on duty waiver.
So that one we will handle.
Just telling you, 1 billion is off. But, this duty waiver also, we also have to look at the developmental aspect of it. Some of them have to do with, public investments that are directly benefiting us. For example, when you look at anything relating to these routes that are done by OIC, most of them would come with this duty waiver, but we did the route. So there are some of them that definitely are eligible and they are tolerable because they are adding to our physical infrastructure and other benefits that we can all, relate to. But the ones that definitely, we can set aside because they mainly benefit,
private investors who even without this, should be able to, do their business without transferring any cost to government. We'll appreciate that.
Yeah, that's fine. And also maybe perhaps also a review of the special investment certificate that gives a lot of, leeway to some. I mean, for me, I don't understand how can you give somebody tax waivers for like a water bottling, something like that, or somebody that's doing they call ferry. You know what I mean? They call it industry. What industry are you talking about? So for me, anyway, we take that with the Minister of Finance themselves, because since they are directly responsible, we'll face with them about this SIC and also with this waiver that they're actually doing, because we give them the power. So we don't mind taking the power back. We don't mind doing that. Yes, but I thought you said you are final.
It's a contribution.
Okay, go ahead.
What I just want to say is that's a good one. And if you can recall, during the SONA debate, the Minister of Finance did indicate that currently they are kind of assessing all the SICs, because these SICs were not issued out of a vacuum. The investors made some commitments. But if you currently audit them, you realize that most of them have not even fulfilled those commitments. So what the minister said is they've realized it. So now, in fact, they have advertised it and they've hired a consultant. So what I would encourage, we'll encourage as well the management of GRA. We'll consult the ministry, but consult the ministry as well so that they can give you the updated list when they are done with the audit itself. And again, we have a problem in the Constitution. Maybe you people also can look at it. Because if you go to section 149(3) of the Gambia Constitution, it's telling you that wherever there are tax exemptions, it should be subject to the approval of the National Assembly. But currently the ministry is relying on the VAT Act to implement what they are doing. So I think for some reasons, I believe they were doing it with GRA. But now we are also giving you this information for free. Do your consultations with the ministry. The moment they subject it to the approval of Parliament, for us, we'll make sure that the only people who will be qualified are the ones who've fulfilled their obligations as it was expressed in their business plans. But right now, they're executing it in violation of section 149(3) of the Constitution, but they said they're relying on your act. So we don't know how that is. Maybe you can help us. Yes, they are relying on the VAT Act. I don't know which relevant section, but the Constitution is clear. Yeah. They should not definitely implement those exemptions without the approval of Parliament. But what the VAT Act is saying, we don't know.
Okay. I will also advise this, that you also use your specialists in-house, in the National Assembly, to look at the law, and see whether the law grants such powers. But what I can say is that the Gambia is not an exception when it comes to this. It is only Parliament that has the right to levy tax. Every tax that is collected, because that is why the bill comes here for you to approve. So we take it that you levy. So whatever is there for us to go and collect, you must have approved it in the first place before we can get to the taxpayers. And the same thing goes for the tax expenditures. So maybe do your own internal legal review and be advised properly.
All right. Thank you very much. Surely we will do that. And then, there's a lot of issues. People talk about these tax waivers. It takes so long to process. What is the right procedure in terms of, example, if somebody has a tax waiver or they want to apply for it, what is the best procedure or what is the right procedure they have to take? Because some people are saying GRA is delaying that, but GRA is not responsible to waive of tax. But can you tell us in very plain terms the procedure that people need to take? So, because people are listening to what we are saying. People are it's online. So can you tell us the proper procedure that people need to follow if they want to apply for a tax waiver?
Let's take this in twofold. One, the JIPA, which we have talked about. If you have a special investment certificate, the certificate will specify all the elements of the waiver, and that one is like direct once it is approved. So now we go to now the other aspects, you know, of the waiver. There are those that, you know, are already spelled out. For example, you know, in the case of the international trade, you know, the Customs and Excise Act, you will have those ones that are direct, like the diplomats, you know, the diplomats that are accredited to the country based on the Vienna, you know, Convention, and returning diplomats. Now, coming to the tax, where you have a lot of, you know, these things happening, the law is very clear. It is only the President of the Republic who can waive tax subject to the approval of the National Assembly. There is no other way. Even the President needs the approval of the National Assembly.
Subsection 3. Yeah. Yeah. Mike.
For the duty waiver in terms of administration, you know, one has to buy the form, and then, you know, you submit, you know, there is a committee that is constituted to look at it. You know, GRA participates, of course. And then, you know, these applications are looked at, and the ones that, you know, are in order, you know, will be recommended for approval. So that's how it goes. Okay. So the ones that are directly, you know, spelled out in the law, once they meet, you know, the approval based on the criteria set by the law, they are approved. Okay. But there are others that we call remission at the level of the minister. Those ones will, after the committee has sat and advised, then the minister would, you know, approve on the basis of the advice received from the committee.
So the first, on the second one is to get the form, fill the form, and pay the necessary fees, and then you make the submission. Certainly. And it will be reviewed, and then you get a feedback whether yes or no.
And then the SIC, like I have said, that one you submit, and then, you know, JIPA will look at it, and then a committee will sit on it and make recommendations for the minister's approval. Okay. Once it is approved, then, you know, you enjoy the benefits that are spelled out. Now, on the tax itself, as, you know, spelled out in the Income and Value Added Tax Act, only the President can waive, and then the test is it has to be to the benefit of the nation. Exactly. You know, public interest, and then it has to also go through the approval of the National Assembly.
Okay. Now, before I forget, in terms of tax defaulters, SOE or private, can you send us a comprehensive list of all those state enterprises, including the councils and the private sector that actually owe you? You send us the list and the dates and the amounts. You send us to the FPAC, and you can address to the Office of the Clerk.
Okay, thank you.
So we do our own collection exercise also.
Thank you.
Yes. Yes, I think that, well, that maybe the Minister of Finance would provide. Yeah. We can get them from Minister of Finance, Yes, you have something? Go ahead.
On the same issue, you know, he talked about the committee that sits over the duty waiver. Yes, I just wanted to ask him about the selection criteria of that particular committee who sits over the duty waiver.
Okay, just to answer that, that is the call of the minister, because he's the one who approves, so therefore he can constitute a committee. But the committee is mainly, you know, Ministry of Finance, Ministry of Trade, and also Gambia Revenue Authority.
Okay, thank you. Before we come to GPPA, the last one is about staff motivation. No, for you, you know. About staff motivation. You know, the success of any institution also depends on the staff that work there. By and large, not only the capacity that they have, but also in the motivation for them to be able to do the work, going beyond. How is your staff turnover at GRA for the past 2-3 years?
I cannot be specific with numbers. I know there is one particular year when we had some that have, you know, taken up, you know, other jobs outside. But that is the exception, not the rule. I can assure you that, you know, our staff are highly motivated, and they are very happy working for the authority because of the number of incentives that we put there. You know, as part of the design of the authority, also, you know, the principle or the advice is that, you know, revenue authorities have to operate based on private sector principles, not central government principles. And that is just to ensure that staff are motivated and then the productivity of the staff is high. So, and even if you look at our submissions, you can see that apart from the medical, there are, we also, invest a lot on their professional development. We encourage them to get into all these kind of, academic professional programs, and they are paid for. And then, and other things that are also there, the loans are there. A lot of them, are living in their own homes. Some are constructing because of the loans are there to cater for all this and to cater for, emergencies. You could have a funeral, you could have other things. So there are many layers of support that are there for the staff. And also, we deal with revenues. So if the staff are not highly motivated, that is also a risk in itself. Yes.
All right. Yes.
Yes, in our case, yes. These incentives are across the board. Definitely they are across. All the staff, have access to these facilities that we have created and are institutionalized.
Okay, thank you. We'll pay a visit and talk to the staff directly. Okay, without you. So now, before we close, let's get hear from GPPA about their compliance as far as your regulations are concerned.
Okay. Thank you, Honorable.